All right, party people, welcome on in. Waiting for some of our folks to join in this morning onto the space, but I can get us kicked off here. Talk a little about what I am looking at in the market here in pre-market. Thank you a sec. Thank you for the emotes down there. Appreciate y'all. Okay, we are gonna have a bunch of traders, by the way, joining in, so hang out with us for a minute. I will get us kicked off here, though. We are having a decently green morning, from what I am looking at least here off the bat. Obviously, Tesla pulling things to the upside pretty strongly. It is up almost 4% here in pre-market, maybe even more than that. Wow, here we go, 7.22%. We're moving to the upside on Tesla. It's looking pretty solid, over 190 at the moment here. And then, of course, when you see Tesla up several percent, you're typically going to see SPY and QQQ get pulled upwards. SPY currently up 0.29%. QQQ also looking upside. Wow. Nice on the Qs right here. Honestly, a pretty strong start to the morning. We're up at 477.61, up 0.73%. Pretty solid. KC, what's going morning? What's going on? You feeling bullish?
Good morning. Bullish on Tesla. Tesla's looking really, really good. Obviously, it's up 7% this morning over 190, which is crazy because I remember on Spaces the other day, it broke 170, and I was like, okay, it's going to flush down to that 168, 167.50, and that's a good buy spot. And it hit it almost to the penny. It was like 8 cents off, and now it's back up to 190. So Tesla, it's incredible to see this thing move. I think 200 is absolutely going to be next. Nvidia also has strength this morning as well, up 3%. So that is helping Qs. Other than that, I mean, Google is slightly red, Microsoft slightly red, Amazon slightly red, and so is Meta. So Tesla and Nvidia obviously with the relative strength. Everything else showing a little bit of red or just relatively flat. IWM is completely flat this morning. So I'm just going to stay patient a little bit. I'm personally not going to take any big trades probably until Monday. I think we could see some just strange price action up at these all-time highs, and we had a lot of data come out the last 2 days, so we'll see how the week closes tomorrow. But I mean, as of right now, it definitely is a bull market, and things are looking strong overall.
Absolutely. A pretty bullish looking market here. Shy, how do you feel seeing some of that data Elon posted?
Freaking stoked. I mean, top three position for me. So very great start to the morning. I did call out that once it broke 180, there was a clear trend that it broke, and I said it was going to be a magnitude 220 if the vote goes through. So we're at 190 now, and I really do think we're going to hit that 220 level a lot quicker than a lot of people anticipate because there's been a lot of people on the sidelines until the vote went through, and now we can, as a Tesla shareholder, you can just focus on what actually matters rather than admin BS, which is the 8.8 event, Optimus, FSD, etc. So love to see that. A couple other notes. I wonder if this Tesla price action is going to kind of bump up RK a bit because it had a clear rejection on the 200-day yesterday. It closed it below. It's been that 200-day moving average has been a pretty big resistance for the stock, for that ETF. So want to see if RK can hold this move pre-market and maybe have the next leg up today. That's why I'm watching. I also just think the indices aren't going to be moving much. Like, yeah, we're catching a bit this morning because of Tesla and Nvidia, but I don't think that's where the alpha is going to be generated next couple weeks. I really do think the high beta names, quality growth, in the software names will catch a bid, and also some of the smaller cap names, and not IWM because there's a lot of regional bank noise in the IWM ETF. It's more of like the Air Test Systems, Indie Semiconductors, Navida Semiconductors, like these smaller cap names who are linked to interest rates because of their exposure in the EV space, EV industry. Like I think they're going to catch a bid in anticipation for rate cuts because we've had a soft CPI yesterday, soft PPI today, jobless claims went higher. I think it's like setting up to be like a not Goldilocks yet, but like rate cuts in September are probably going to be priced in even higher than 70% if the data we're getting is going to continue the momentum of like the soft print. So that's kind of what I'm watching. I'll pass it back to you because I know we have a couple other speakers before market opens in 7 minutes.
Yeah, it's coming up. Amp, I see you in the crowd if you want to jump on stage. Evan, good morning. What were you guys discussing in your morning space?
Had to be there.
All right. Well then,
No, man, we were
Shy.
talking some PPI this morning, came in below expectations. It was actually negative, the month-over-month number, which is interesting. We'll see how the market ends up taking that. Had a nice little move higher. Initial jump volumes came in above expectations. The trend has been starting to move higher. It's not at a crazy place by any means at this point, but it is definitely a trend that is starting to happen. And we'll keep an eye on that. Trends can break pretty easily, but so keep an eye on that data. We obviously talked. I'm sure we'll talk about Tesla at some point today. That it got the votes. Stocks moving higher. Elon Musk tweeting out a little bit. I'm trying to get him on the spaces. Now feels like a good time to try and push for that. So we'll see. There's some stuff around their prices in Europe might be going up. Warren Buffett bought more Occidental over the last couple of days. Wolf, he filed another Form 4 last night for that buy. Now they own $15 billion of Occidental, is what I think it was. So we'll see. But a couple stuff going on. A couple stuff on watch. Should be an interesting day.
Sounds good. All right, what else is popping around here? Besides Tesla seems to be the largest one up. I'm gonna go out on a limb and assume another red day on Celsius. Oh, well, it's coming back to green at the moment. It was down another few percent plus in pre-market. It almost broke 60 here. Looking at Mobileye in pre-market as well, that one's up 1.57%. They had a spike at like 2:30 a.m. in those overnight markets, but I don't think too much has happened there. For the most part, it does seem to be decently green across the board. Shy, now that we've got FOMC, CPI out of the way, what do you think is kind of that next big thing the market's looking forward to? Because earnings aren't for a few weeks.
Yeah, I mean, that's exactly, you brought up a great point. Like, that's why I thought that this week's data, if we get through it on a positive note, I just don't see any near-term catalysts until that next earnings cycle to kind of buck the trend. I do see some profit taking maybe on the indices, like profit taking on like the Mag 5 names, just because there isn't any kind of near-term catalyst to like buck the trend, like I just called out, and some of the lagging high-quality names like haven't really performed that great this year. That might be the place to get the alpha, just because this massive run up we've had in the indices on SPY and QQQ, they're very top heavy on why that is, like why each of those ETFs are up 12 and 13%. And I do think it's going to be start getting dispersed more, where it's not going to be just Mac 5, it's going to be the quality growth, like the Snowflakes, the MongoDBs, Atlassians, like they haven't caught a bid yet. It's also going to be the solar names, which the charts are looking absolutely bullish. And it's also the EV names, like Tesla, the vote's going through, but like it's also tailwinds of like rate cuts is going to really, it's going to completely transform the consumer demand on buying cars. It's going to be a lot more affordable. And who's the king of the EV space? It's Tesla. So like essentially, if the EV names are going to catch a bid from the rate cuts, Tesla should be the poster child for that as well. So I'm definitely putting my eye out for laggers, because there's nothing in the next like month or so that the bears can hold on to kind of justify the market correcting. What we're probably going to retest is 8-day EMA at some point in the indices, but like I just see smooth sailings for quite some time, especially in the summer months where like there isn't that much volume. July is a very anemic month, especially. A lot of the top players are just take that month off and just that's their vacation time. And usually, when trends reverse, like you need some kind of volume to come in the markets to show that follow through. And I just don't see that in the near term. So, um, maybe an interesting play would be to I only want to suggest it because I think shorting the VIX is it's highly risky. But like, there's other ways to play the to play this like anemic couple months. Like a perfect one is parking my cash into an ETF that generates like 1% return every single month. Like the perfect one's Theta, ticker THTA. Like the SoFi ETF, where like they never had a losing year, and you can get I won't say guarantee return like 1% a month, but like the historical facts have proved that. So maybe that's like a good avenue of like raising that capital in the quiet months where the market won't reverse, but also I don't see it going up that much more. Like maybe we hit 550, but that's even a stretch because right now it's really overbought the market if you look at the indices on the weekly chart. So a great avenue of getting some kind of alpha if buying the lagger growth stocks is too risky for you is a high yield ETF like Theta. So that's kind of how I'm thinking about it. Gav, I'll pass it back to you. I don't know what do you think about that strategy.
Yeah, shout out to that. I want to come in and quickly say, first of all, we have been doing some work with these different ETF companies, and whenever we talk about one, the goal isn't, hey, go in and buy it. It's put it on your radar for you to go in and look into it, and maybe that's right for you. But THCA has been one that's right for me, and there's been a couple other interesting things out there, but I've actually been adding more and more cash to it. We've talked about how much cash I have on the sidelines, and I haven't been taking anything out of the market and Qs and anything like that, where the cash that I've been putting into THDA is the one that I've already been holding on the sideline in those high yield savings accounts. That's gotten me 5.25%. I'm taking a good little chunk of that and throwing it into names like THTA for at least for the next couple months. And the plan is as I keep going in, and if we get a pullback, maybe I'll take some out of those names and pile them into the market. But given where we're at and how much cash I have on the sideline at 12-13%, taking advantage of it. I think it's even supposed to be higher. We'll see. I've been buying last couple days shy too. We've been beefing the portfolio. I'm excited for the next THCA dividend. But market's about less than a minute away from opening up here. Oh, market's open. Ding 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 ding. You like my bell?
Oh yeah, just do it every day.
All right, I got you.
So we are opening, and obviously we're pretty much at all-time highs as well right here. Tesla fading a little bit. What a day for predictions yesterday. All right, I see we got Frank and Kim up here too. Good morning, Frank. What are you looking at right
Hey,
off
good
the rip?
morning. NVIDIA just made a new high. 129.65. Yeah, I think the market's going to digest the last couple days. I mean, it's been on a huge tear. Obviously, Jordy's happy today. Tesla. The vote went well, I guess, for Elon. So up $10. I don't know if it'll hold it, but I think it's good for the company and everything else. Yeah, I'm looking for the day to be an inside day within the zones that we pretty much played out yesterday. I'm trading NQ, and the contract went forward to September today. So it shows the NQ at 1900, 900. So it's going to go to 20,000 pretty soon. So it's interesting because of the premium of the time lag. Yeah, that's about all that's new with me this morning. Apple, wow, that was unbelievable run.
What's she doing today? I haven't even looked.
It's up 215 basically.
Okay.
Yeah,
I'm gonna short it, Evan.
Evan, I
I
have
wonder
to
if
tell you,
220s are a range.
was trading at 220 yesterday. I sold some covered calls on my position. So
Nice.
at
At
240s
220?
and 250s, you should do the same. If
Okay,
they
I like
take it
that.
there, you let them have it in July and August. But I don't think they're going to take it there. It's going to digest.
Let me look at them. July 12th. Style calls 240. Okay,
Yeah,
61 cents.
premium.
I'm still in the leaps that I have. I haven't taken any profit on those ones yet. I was thinking of adding into it yesterday, not the leaps, a shorter dated one. We'll see.
Casey, I'm gonna short it. Oh, jeez.
I'm gonna do
Snipe
a
it.
call credit spread.
There you go.
So I'm not going to buy puts, but I am going to go far out of the money on some calls and sell them for just to collect a little bit of premium because I am expecting a little bit more inside day price action, not any further big trend on Apple personally. At least just going into tomorrow. I don't foresee Apple going to 30, but we shall see.
I mean, it's kind of moving right here. Good morning, Kim. What's going on?
Good morning. Well, I was happy because I called out Oracle, I think on Monday or Tuesday when I was on here, and they had earnings and they killed it. It's still running. I had long dated calls and then, I got out of them yesterday because, I'd done well on them. So it's one of my favorite stocks right now. They do, I think I had mentioned on Tuesday, like some of these old legacy companies that, didn't do anything for decade or more that were the highlight of the dot-com bubble, Oracle, Qualcomm, they've, had some great runs lately. So it's kind of fun to see those legacy companies that didn't make huge moves before transform their businesses and start catching up with the whole AI theme. So yeah, those are kind of the two that are my focus right now, I would say, and our long-term positions for me are Oracle and Qualcomm. And Qualcomm's had a great run.
Yeah, just definitely great to see some of these tech companies continuing to move.
I think people sometimes don't think of these legacy companies either, right? Because they're not the new kind of bright, shiny company that's out there making a splash. So, don't forget about those because Qualcomm's rent, almost doubled now in the last, I don't know, probably the last, I don't have it right in front of me, but probably like the last 8 or 9 months. So it came out of like about 120. Can't remember what that, but anyway, it's at 214 now. And Oracle's at 141. It was like at $80 or something earlier this year.
A little bit of a pullback here this morning on Qualcomm, but yeah, absolutely. These have had some great run-ups. Shai, what do you think on Qualcomm and Oracle?
I mean, Qualcomm, you can't get any better than what they do on the smartphone space within the digital economy. It just China scares me. They have a high exposure to China, and geopolitically, you never know. And I just don't think Qualcomm will ever get the multiple they deserve due to that geopolitical risk. What was the second name you asked about, God?
Oracle.
Oracle. I mean, Oracle is the database king. Um, I I'm, I own MongoDB, top 10 position for me. A lot of people say their NoSQL is going to disrupt Oracle's business. I always laugh that off because that's not fair. It's David versus Goliath. Oracle will constantly be king of the database space, and again, if AI is real, which I absolutely believe it is, and it's going to be sticky and it's going to change everything we do in this AI revolution, Oracle is going to be riding that wave as the king of the database space. So that's a name that I haven't looked at valuation because, like Kim said, it's funny. I do mentally categorize like the IBMs, the Oracles, the Intels, the Dells into a separate section of like not touching because I put that as like the dinosaur category of like their innovation days or growth days are over, but they're still like they're catching a second wind. If you guys haven't noticed, like the renaissance of these older names because they have such a massive presence in the enterprise and software space that like yes, they're growing mid single digits, have been around for decades, but their second wind is being caused from AI because AI is now causing all their initial suite of products to kind of get that makeover again with this AI features. And because of that, there's going to be a ton of pull forward demand on the enterprise space for their products because they're now innovating it with AI, which they haven't really innovated their suite of products in quite some time due to what innovation besides like what innovation can you do after cloud? Like there wasn't really any until this AI revolution. So like now that's why you're seeing all these like I'm air quoting dinosaur names like kind of catch another bit and like people are like, oh, I forgot about them or like, wow, this is like so nice to see the nostalgia of like the Oracles, the Dells, the IBMs catching a bit again. So I think those kind of names definitely need to be revisited if you are risk averse and just like don't want to kind of have that high beta exposure of like the volatility, those are really great names to get that exposure of the new digital economy because they're gonna be the pillars of it due to the connections they've had, the years of being in the space and the experience. So yeah, hopefully that provides some color. But yeah, those names are great.
Well, I mean, Qualcomm didn't make a new high for basically 2 decades. I mean, it's only been in the last couple years. I always think of IBM as a boomer company, sorry, and I think of Oracle and Qualcomm as Gen X companies. And so I kind of put them even in a more separate category, you know? And but yeah, I agree with you 100% Shy. I mean, and the nice thing is you get good dividends on these as well. So you're getting, you know, the growth movement, but they've really started taking off. So I think, like you said, Shy, like they're transforming themselves based on this new AI theme. And it's always good when you see these older companies be able to actually catch up to the transformation or get on board with the transformation because they have such a deep moat and experience and cash, they're able to actually execute on it.
Well put, y'all. Market still seems to be climbing up a little bit here. Crypto trying to climb back up. Apple looking for 216 here, up 1.3%. Tesla, which was given some of it back a couple of minutes ago. Let me see if we got any change there. Tesla still up 6.62%, so still holding, or 6.5%, still holding pretty nice up there. Not giving too much of this away just yet. Casey, can you go a little bit more into detail on the strategy which you're implementing on Apple there? And also,
Yeah,
yeah,
so okay. What are you gonna say?
I was just gonna also say Emp if you wanted to come up, or if there's something that's glitching, just let me know because I see him in the audience. But yeah, go for it, Casey.
So for Apple, Apple is on absolutely a tear. I mean, just look at Apple on the daily chart. This is freaking insane, right? So the my strategy for Apple is I could see it retesting 220, potentially getting a double top off that psych level. But right now, what I'm looking at are the 222 points, the calls. They're around $65 right here. So as it starts to climb up higher, get a little bit of strength right here. But if it continues to hold under 220 or double tops up there, I plan on selling the 222.5s and I'm going to buy 7.5s for tomorrow. I'm going to swing them for a call credit spread, which is a bearish position. So I'm essentially saying that by tomorrow, I don't see Apple closing over 222.5. I want it to stay below that number. So it's had a really, really good run. It's super strong. We've had a lot of down this week and some decent moves so far. So again, I'm just kind of expecting an inside day. So if there's one thing that I feel a little bit comfortable risk to reward on staying kind of flat where it's at, but not going up any higher because it's honestly it's kind of just bought by this point because it has a really really good run. It's going to be Apple, so I'm going to take that chance when I can and open up a call for that premium.
Evan, appreciate the details there, Casey. Evan, I saw you just shared an update from Buffett. That's pretty interesting.
Yeah, I think did I say that earlier? I thought I did. That they bought more Occidental. Now own $15 billion worth of it. Company's worth about $50 billion. So
How and what percentage of his portfolio is that now?
35%.
Jeez,
No, I'm kidding. It's
pulling.
not even close. It's not even close.
I was gonna say it's like Ackman with Chipotle.
Give me a second. So it would have gone up a little bit from this, but as of the end of last quarter, Occidental was 5% of the portfolio.
Got it.
And that's just the equity portfolio as well, which is I think less. I actually think less than half the company, but yeah. Yes,
Big
yes,
pop
yes.
on AVGO
Yes,
off that news
yes.
yesterday.
Yeah, good earnings. Stock share buyback. Ooh, 1,700. It's stock split season. Williams Sonoma did a stock split this morning too. 2 for 1.
What is Avgo's or Broadcom's stock split? 10 for 1?
10 for 1, yeah.
Shy, did
So
you see
170.
Jumia?
I know Jumia's might hit $11 like this week. It's absolutely wild that move. I love to see it.
I have August 11 calls that I bought when it was like at 8.
I mean, I'm gonna keep saying it. I think it's gonna hit $20 next year, and it's gonna go to get there real quick, especially when analyst coverage is gonna hit that name in the coming weeks. I do think it needs to cool off a bit. It's essentially more than doubled in like less than a month. But again, like these smaller cap names, when it's something they hit an inflection point, like they run and they run hard. And clearly, Jumia had that inflection point a month or so ago in their earnings call. So enjoy the ride. It's been a brutal one if you've been a Jumia investor for years. Luckily, I just got in last year when I saw that they aren't a dead company, but it is fun to see these names run, and I just need my baby Snowflake to be the next one to do it.
Shy, I see more people loading up Mobileye calls. I still have a couple of those. Do you have any thoughts on that?
Yeah, I mean, Mobileye is interesting because fundamentally they're a top-notch company. Um, like the only hesitation why long term I've never invested in them is Intel. In my opinion, I think Intel's going to offload a lot of their shares in Mobileye in like the next year or so to fund their manufacturing component, essentially to fund themselves getting into the AI arms race because there's a lot of capex requirements to kind of for Intel to get into that race. And I think selling Mobileye shares will be the quickest route for that. And also, like I don't know the long term advantage on their tech compared to for the lidar tech for compared to like what Tesla has. I know Tesla uses Luminar Luminar Laser is the ticker LAZR. Um, and I just think I don't know, it's like a highly competitive space, but like it's a great short squeeze candidate. I mean, there aren't that many companies out there that are free cash flow positive, have good margins. Yes, they're not having the growth this year, but that's not their fault. The EV space is getting destroyed. So like I think it's a really interesting short candidate because like on the chart, like if it holds up better, like I know there's been a solid past 2 days, like I could see $30, like maybe hitting the 40s actually. So I think it's a really good short squeeze play as a trade, but long term, I do have some questions on their actual modes.
Yeah, I remember that spin-off way back when. All right. Kim, what's the latest updates on your end in silver, gold, copper, all that stuff?
Well, silver I have a call spread on, so I'm not actually trading the. Um, I decided a few weeks back to just put a call spread on instead of like getting in and out of it, and that is actually for September. So I bought the future out. I think I'm in the Z contract. So I'm down in that. You know, I've made a lot of money in it this year, but you know, if the economy, silver, I more bank on it if there's geopolitical because it flies higher if there's any like tension or news going on, right? But it's in a downtrend right now, definitely. It's broken. Well, it's at 29. That's kind of been its base. So we'll see if we get a bounce in it. Because the last few days it's been basically straight down.
Yeah, that has that's just been the way it's going. We are getting that move back up on Mobileye here, which is nice. I know gold was looking pretty interesting a little bit ago. I was looking at like GDXU and some of the miners too, but like you said, just pullbacks here, down 4% today, I believe, on GDXU. Had a big pullback a few days back, so it's trying to like reset a little bit here. Is this GME creeping up here? Up like 5%.
And just one more thing. That's one thing we don't talk about very often, but you can do calls and puts and spreads on futures. So that's just the way I chose to do it this time to give myself more time with the big moves that silver had been making. But a lot of people don't know that you can actually trade the call and you don't have the same theta decay. So it's nice.
That's great. That's great.
Growth is really selling off today. Snowflake just falling off a cliff. Even
Wow.
Atlassian, who was put on Citi's best top ideas list, I thought maybe they catch a bit because I think they're stupidly undervalued right now, and they're selling off MongoDB. So like growth is not catching a bid. I thought they would, but not seeing it today.
And I actually bought some Snowflake yesterday.
Microsoft is squeezing to the upside on the 5-minute.
RIP. I had bought a little bit of Snowflake the other day.
Good morning.
Morning. What's going on?
Oh, not much. Had a young one awake much of the night last night, so getting a little bit of a late start here, but we're all good, ready to go. Oh,
I bought some Snowflake too recently. Don't worry. I didn't even look at it today. Ooh. Google. There's a video in my head. It's like of the guy who's like wants to fake work, and it's like the alarm clock that just fakes the work for you. Has anyone seen it on Twitter? You have sent me the post. Wells Fargo fired more than a dozen employees last month after investigating claims involving simulation of keyboard activity, creating impression of active work.
Yeah, Wells Fargo. Not exactly the cleanest operation. Or so it seems. Another scandal.
Apparently, it was all in a specific segment I saw. I do declare.
Why do you, maybe this is for Casey and Shy, why is IWM not getting a bid? I mean, you have yields way down.
I think shoot, is Casey talking? Because I couldn't hear Amp before.
No,
I'll
he's
drive
not.
down and come back.
No, I'm not talking.
I can't hear.
All right,
Casey
perfect.
either.
I just think the way that IWM is like kind of set up is like the winners leave to join the mid cap and like the S&P. Essentially, it's a form of young, small companies that eventually will leave or just crap companies. So that's why like I hate using IWM like as a benchmark for small caps. Like I do love using IWO more, but again, like I think they constantly have a ceiling on that ETF, and it's almost like a way of playing the regional finance banks without actually playing KRE, because the KRE regional finance banks are like essentially a third of the IWM, so like major weight in that. But even today, like you see KRE is down like close to 1%, so like that's clearly dragging IWM down today as well. which is surprising because the yields are lower today. So I thought that maybe they would catch a bid, but that's my 2 cents. But I'm wondering if Casey agrees or disagrees with what else he has to add to why IWM isn't catching the bid or hitting that 210 level that everyone's waiting for.
No, I absolutely agree with everything that you said. I'm actually I was in a long position on IW. I'm actually about to cut it here in just a second if this relative weakness this morning continues. I'm kind of surprised as well that I'm not seeing more of a bounce here on IWM. I know if you go to the 4-hour chart yesterday, it did hit a really, really big trend line from the all-time high around or not all-time high, the recent high around that 210 area up to like 208. And then yesterday, obviously, you got that big pop. So it did have in there. If IWM pulls back down to 202, 201.50, I would like for that area to hold as support. You can kind of mark that zone from the sessions at the end of last month and then the sessions like 2 weeks ago from like the 4th to the there's a big demand area down there, and if it holds, it is going to create a little bit of an inverse head and shoulders. So I'll look to be a buyer back then. But I am still looking for further upside on IWM. So I wouldn't say the word frustrated, but disappointed, I guess, that we're not seeing the strength here behind it in this name and these small caps. So we'll just be patient and let it run its course and re-enter again whenever the opportunity presents itself on IWM.
My thought on IWM is, yesterday the Fed was pretty hawkish, and only the dot plot went to 1 point over the next year. So that doesn't really bode well for IWM. In order for IWM to go higher, like Shai said it's KRE. It's the problem. The regional banks, they have to catch a real bid for it to break over 210. So that's it's really it's simply the yields. They're not looking for yields. The bank the mortgage yield, rates aren't going to come in until they really drop. So that puts a lot of pressure on the regionals, and the regionals are working out of a lot of issues with commercial real estate. I think it's more of a macro thing, but it's going to take time. And he said it again yesterday: higher for longer. And where's inflation coming from now? It's coming from the stock market. So there's a worry that there's going to be some kind of inflation in the next couple months. I don't see it because the numbers have been benign for the last 3 weeks, but they're obviously going slow. And when they drop rates is when I'll actually be concerned about some of these big caps. Because that means they're not going to lower rates until something breaks.
I mean, that's the key with
Amazon
IWM, right?
looping
I
here.
mean, a lot of those IWM names, they need to be able to borrow at an affordable rate, and until the rates actually drop, I mean, yeah, the market's a little bit forward looking, of course, but until those rates actually drop. And then I like what you said, Frank, that last part. That's probably one of the biggest keys that KRE regional banks, there's still under a lot of pressure, especially these balloon notes. I mean, you and I both in the real estate space, we've seen it. These investors that have these commercial loans and these balloon notes that are coming due at almost twice the rate they had 3 years ago is tough. It's putting some stress on a lot of those portfolios, right?
Loving the combo here, guys. We are holding up pretty nicely on Tesla, up 6.62%. Apple did pull back a little bit here last 10 minutes. It is trading at 214.50. Nvidia holding up real nice as well, near the highs of 129.25. You mentioned Amazon. That one is ripping. What's up, Amp?
Boeing, another day, another negative headline. The Reuters article just came out about quality control inspection with, I don't know, thousands and thousands of bolts that weren't correctly torqued was this article. So just another day, another hit piece on Boeing. What else is new, right? I am watching SPY to the downside. It has not had any of the bids really that that tech has had. I mean, it's still holding in decent here, but not the best look, and it still has a giant gap below that it barely held yesterday. Market's coming in just a little bit here, so we'll see. Some of these other things, I mean, if you look at like Exxon and some of these other names have been pretty much down. XLE, some of the healthcare names have been down. So I don't know. We'll see if money rotates back or if they're all just rotating into tech again. And we have Adobe earnings. I was just pulling up. We do have that this afternoon.
Yeah, taking a look real quick at just general earnings and IPO calendar. Looking at earningshub.com, like you mentioned, we have Adobe. We also have, is it Restoration Hardware? Is that RH?
Yes, RH.
Yep. So they'll be afterwards. Next week, pretty freaking light on the earnings side of things. You'll have like Kroger towards the end, FactSet, but not a whole lot of stuff. Shai, did you know that FactSet was publicly traded?
What? It is?
I didn't realize until I
I, I,
saw that they have
I
earnings
hope their
coming up.
ticker's fact. What's the ticker?
They have, no, it's FDS.
Oh, it's lame. Wow.
Yeah, it's pretty bad. Yeah, dude, they're expecting revenue of 552 million. That seems pretty wild. Would you have thought that that platform's doing 500 million in revenue?
Not at all. I'm gonna look at their fundamentals. I'm so curious now.
Yeah, ticker FDS. Let's see. FactSet is, yeah, checks out. Stock's not exactly doing great, but wow. Oh, I take it back. Just their last like 5 years have not been good, but geez.
Bro,
This
oh my
says
God,
since
dude, they have 28% free cash flow margins, growing the top line in the mid single digits, but still, they have some juicy margins. That's so surprising.
I know they're pricey. It's a $15 billion market cap. Jesus. I mean, it was a pretty good platform. I used to use it in college. Wow, trading 327,000 shares a day.
I had a brief talk with them, but they kind of just ignored me. They told me like, yeah, we don't talk to people unless they have a company email. So like the fact that Gmail, they like would have instantly rejected me.
There you go. Sounds about right. Oh gosh.
I could maybe try and circle back and then I was trying to find a like good platform.
Good news is company emails rather cheap. In case you ever did need one. But yeah, that's super interesting to see that FactSet is publicly traded there. What else is coming up? CarMax. What about that stock's been up to? I remember when CarMax, or at least all the car companies, were going crazy. Wow. Lazy Boy and FactSet are expecting the similar amounts of revenue, Evan. Would you have guessed?
Yeah, fair enough. I don't think that's that crazy.
One of their stocks has done better than the other.
FactSet. I'd rather be a tech company making that revenue than a like a as you talked about the margins are gonna be significantly better. FactSet stock
Yes.
significantly better. Lazy Boy market cap 1.5 billion. FactSet 15 billion. That's the difference.
Interesting stat from yesterday. The three largest companies in the world all closed at all-time highs yesterday.
That is cool.
What an insane market.
I don't know that.
I'm in some SPY puts.
I'm gonna post that. Go for it.
Nvidia just keeps running.
What are the other
Mm,
name? I haven't looked yet. Like Kim, do you after Avgo? Have you looked at the other names at space like Micron and them? Are they still up?
MU, yeah, I have a leap on MU at 140, so that is I just have one, but that's up over 140 now, and MU was like at I don't know 75 or something, 80 not that long ago, and then Qualcomm, of course.
Check that out for anyone else. Or
Nvidia,
check that out.
Marvell, I have that one. Do you still have Marvell, Shy? Or is he even here? No? Marvell is just sideways, but it looks like everything else. I don't really watch AMD that much. That's down today. Yeah, Avgo, I looked at a 1500, 1600 call spread, bullish call spread yesterday. And I almost hit the buy button and I'm like, I just can't really like dig into this right now. $7,000 for that call. It would have
Yeah.
been like a $7,000 trade. The cost was 3,200, so that's why I was kind of like, do I want to buy one? But yeah,
Yeah, going into earnings too. It's always a
I hate it when I
tough
have it
spot.
ready to go though.
Yeah.
SPY new low. The SPY puts are green.
Casey, I'm still holding a runner from yesterday.
Are you really?
Yeah,
Let's
I
go.
mean, I took Friday's strike, so I don't know. It's just not kind of just stuck in the mud, to be honest.
Yeah.
Next week is going to be kind of wild. I mean, obviously we don't have much earnings or anything like that, but we have quad witching next week. So your futures contracts roll over, like Frank was saying earlier. Obviously your quarterly options expirations and stuff. So it'll be a little bit wonky late next week.
And did you roll over to September in the futures?
No, I haven't yet. Usually I'll look around Monday or Tuesday. I start looking to see if the volume is higher on that new contract.
Yeah.
It's usually like Tuesday to Wednesday, I think, when you see the noticeable volume on the new contract. But you gotta love it when TradingView updates and everybody thinks we gapped up like 250 points.
Yeah, and I have TradingView, so I rolled up.
See, on TradingView, I use the actual like NQM 2024.
Yeah, I could go back to that.
Because
but-
otherwise otherwise it messes up your levels, especially when you get that roll gap. It
yeah,
throws off your levels. But it's something to pay attention to, especially if you're a future trader, if you're newer to futures, just to be aware of. I mean, futures obviously are a contract in themselves, and target date's next Friday. So next one will be September. Is that
I forgot to
NQU?
roll my NQ1, not maybe it was like a year ago. I remembered, and for some reason it just slipped to my mind, $1,500 loss because I didn't
Ooh.
roll. So I will never forget that again. I had some shorts on, and then just when it closed out, it had gone out. Anyway, don't ever do that, people.
Sometimes those lessons even they suck, but you'll never forget.
Well, and the thing was, my husband kept reminding me, kept going, don't forget you have futures contracts you need to roll. I'm like, I know.
Oh boy. Yeah, so the next contract for anybody curious is U. So if you trade NQ or ES, just type in like on TradingView NQ U 2024. Same with ES. If you want to separate the contracts, or if you're trying to stay on the current contract for day trading right now, NQM 2024.
Are we still watching Mobileye? What are you guys thinking?
Yeah, definitely. Did you see Bananas post?
Yeah.
So I think that they're getting in for a little bit. And it has, I mean, it has been bouncing this morning. At least a little bit. Calls are up like 75% today.
Yeah.
Not for Celsius, though. Here we go.
Where is she? Where is she?
$60.60.
Ooh.
You know,
It was under. Was it under 60? Ooh,
It was under
It
briefly.
did peak under a while ago. This is a big spot though on the weekly.
Yeah.
Big spot.
Oh boy, Tesla. Still headed up.
Oh, where is she?
Tesla is trading over 190, almost at 191.
Ooh.
I wonder if we can get some more continuation today.
I just noticed ARM. I have that stock, and sometimes I don't, I try not to look at my stocks every day, the ones that I'm long term. It's at 157 right now. That like flew up.
Oh yeah, ARM was on a ripper yesterday.
Like I didn't even notice it because it was just seemed like it was at 110.
And it had like a 10% move yesterday, I think 9%. It was crazy. There was a few random biotech names yesterday that were really running too, like RXRX, and what was the other one? Paper Gains was trading. Some big moves yesterday though.
Next week, we also have a slightly shorter week, by the way, if anyone's buying those calls a week out. Stock market is closed Wednesday.
Juneteenth.
Mm-hmm. So just be aware. Big bounce back on the miners today, but man, these things, it's like one day they're just getting flushed, next day they're back up. Pretty nice week, though, on stuff like I'm watching Cypher.
What kind of a boring trading group this morning?
Yeah, I don't know.
Boring market.
Yeah, you're not. I mean,
I'm still short.
you're short on SPY.
Yeah, I caught up the spy puts earlier.
Yeah, I mean, SPY and Q short has worked. Q's moving here, which is nice, but not a ton else. I am just watching these things kind of trickle down, but it's tough, right? Because stuff like Tesla have been holding up pretty nice. Now you're getting a red candle here on Tesla. Nvidia have been holding up. Now you're getting a bit of a red candle there as well. Miners are up, but coin is down. So you're definitely getting just not a ton of confluence across the board.
I'm in
Sphere
some
and
Mobileye
Shell.
calls now.
Which ones did you take?
I was in them already, but I literally bought like one share just to get back into it. But I bought like a couple more now after trade. $33
All right, I'm gonna take
calls.
a few of spy
expiring
puts
next week.
off here. Here we go. All right, scaling.
Nice. Yeah, I have $33 calls too.
Oh, reminder, we do have Fed speakers. to watch out for, I guess would be the term. I think Fed Williams does have a speech today, but they're out of the blackout period now, so I'm sure we'll hear from them a lot next week.
I took another light trim.
Great job,
Dan,
Casey.
you
Yeah,
guys,
nice
you
trade.
guys see SMCI today?
Yes.
Thank you, thank you.
Oh wow, 4.5%, 5%.
Yeah, it's kind of been ripping.
Trying to get over that daily 21.
Hey, let's go TME. I added some TME the other day. I think I spoke about that on here. I don't know if they had any news today, but it's up 4.5%. Evan, you want to join me in my China trade?
We'll see. Maybe at some point I'll go over there. I'm focused on
Taiwan.
a couple other stuff
Taiwan.
right now.
You're saying TME is Taiwan?
Is TME
Isn't
the
it?
company that owns like everything?
Yeah, TME
Oh,
owns
maybe.
everything.
Oh, maybe I was
No, it
thinking of
doesn't.
what's
That's
Yeah.
Tencent. It's
TS,
Tencent
you're thinking of
Music.
TSM.
TME, no, TME owns everything, don't they? They have like
That's
a
not
million
Tencent the
brands.
company. That's Tencent Music.
Oh, even better. There we go. All right. TME, headquartered in Guangdong, Shenzhen, or Shenzhen,
I was thinking of
Guangdong.
Taiwan
TECHY, I
Semiconductor.
think, is Tencent's ticker, but it's not Tencent.
So wait, is this the one that owns TikTok?
No, that's ByteDance. Or is he talking? I can't hear him.
So what does Tencent Music own?
I don't know.
The heck? They own 4 highly popular and innovative music apps in China. Okay.
TECHY is Tencent.
Okay, but Tencent's pretty big still.
Tencent
For
is big.
TME,
Tencent Music.
TME has
That's its own thing.
120 million paying subs.
Wow.
The Guangdong Tigers. It's the only reason that I know about Guangdong, China. What was the other ticker that you were saying?
TECHY is actually Tencent.
TCEHY.
Order filled.
Well, shout out them. They're also having a pretty good day. It's a much larger company. It's 455 billion versus 25 billion.
SPY taking out pre-market lows here.
Order filled.
All right, should I buy some of this 10-cent as well?
I would just let you know that it's what you're buying. So that's up to you.
Hey,
This is yesterday's high on Qs here too. We probably bounce a little bit here, but this is the level. Like, if we start failing this part, this is where I would look to start shorting into yesterday's value. Frank
Dad,
just took
Boston
profit.
won
I think I
again
heard it.
last night.
You
All
just
right, I
seen
took
this?
some more off.
I didn't watch. I was
SpyPut
thinking to myself, I
and
didn't
ES
watch. I
there.
don't care.
Yeah, it was a painful ending.
My stops moved up on the
They
Interesting.
foot.
lost by 7.
Painful was watching the Mavs game last night.
Well, that's what I was saying. Not a pretty scene. Luca fouling out, then Kyrie going all hero ball. Kyrie's like, I got this. Fade away,
He didn't
jumping
have it.
sideways, 3-pointers. That's what's gonna
Yeah,
win the game.
5 years ago he used to make that shot.
Yeah.
Luca complains so much to the refs. He's not ever going to get calls.
Mm. Tesla still coming down here. Some of the semis giving up some of their gains here as well this morning.
AC, did you hold any Apple puts or take any new ones?
No, it's just a call credit spread I'm looking at.
Wow, look at Qs. Big move down on Qs.
Yeah.
Yeah, I just closed some ES here for 6 points. Let's go. Still in the SPY puts as well.
I took profit on those Apple puts yesterday right at the close because we got such a big move. I wanted to lock it in. I almost took them again today up there in the 216s. But now I'm sitting here going, I think I'm maybe late.
Oh, my Q's cost base is over 400.
Oh wow. Just gonna keep buying.
Mine smaller amounts and less often now. We're still going.
I
We're
just got
kind
an
of holding
alert
it
on
yesterday's high.
AMC.
AMC's ripping.
Q's up 17% year to
Yeah, I
date
just got a
now.
volume alert.
That's interesting because GME was pulling back. I thought. Yeah. But yeah, AMC definitely ripping.
Order filled.
Evan, do you think the Mag 7 are getting overvalued?
Probably always overvalued. I don't know. Maybe, but I'm not good enough a trader to really get that right, so I'm just going to keep holding in on them. I have a long enough time frame. If AI is real now,
Order filled. Order filled.
How's that Mag 7 ETF doing?
it's been doing very well. I haven't looked recently, but I mean, another
Up
one of them just joined in, so
35%.
it's probably doing very well. Look at the
35,
AUM.
35% year to date. Wow, 387 million AUM. Jeez, they launched that at the perfect time. Well, they could have got, I guess, gone in a little bit earlier, even, but not bad. Not bad timing when you're up like 80% since you first launched. Oh my God. Twitter, stop logging me out. This happens every day now.
Maybe start calling it X, and that won't happen.
Maybe if it stops logging me out, I'll call it X.
Oh, a little paradox we got going on.
Guess we're stuck. Schrodinger's Twitter
All right,
login.
new low on SPY.
All right, I'm back in. I'm back in.
He's back in town.
Emp.
I really thought we'd go back towards 5,400 today. So I was kind of surprised when we had that big move up.
Emp, you're getting called out in the comments. They said anyone with the sunglass visors and their PFP is sus.
Yeah, Pit Viper life, man.
I honestly agree. Pretty sus.
Damn, I thought they were Oakleys.
No, I bought those at Citgo.
The Pit Vipers.
Bought,
What's
bought
up,
a
Sniper?
Celsius, a phone charger, and some sunglasses. Oh, Stock Sniper's here.
Good morning.
What's going on, man?
Nothing much, man. So I'm checking out SPY. You know, we're sitting at this pre-market low right here. I think we could have a possible bounce here. I kind of want to see how it's behaving in the next couple of minutes. But overall, seeing SPY in this 540 range is kind of crazy. You know, I think we could anticipate some profit taking, just like we're seeing. We're sitting at 6 million volume right now, and we're just about an hour in, so we're kind of low on the volume for the day. But overall, you know, I do like that long setup off pre-market low. I just want to kind of make sure that we're not going to dip through.
Appreciate it. What's your thoughts, Snipe, on trading some of these Chinese names?
Personally, Baba is on my do not trade list. Once upon a time, this is like probably about 2 years ago, I've gotten trapped in some Baba calls, and ever since then, you know, I kind of got a little bit of PTSD. Some of the other names I'm not afraid of as much, but, you know, I personally like to just stick to SPY, Apple, Microsoft, Amazon, Tesla. Nvidia. Occasionally like a Palantir trade, but I would try to stick to what I know best.
Yeah, that's fair. What are your thoughts on that Tesla move we saw this morning? You've been trading a lot of Tesla?
I haven't been as of late. As of lately, I mean, I've been pretty stuck to the SPY, but Tesla is pretty interesting always. All time,
Taking a trim SPY puts.
it's pretty nice. Nice SPY puts there, man. I didn't know you added those, but definitely looking pretty good here. But Tesla right now, like we're seeing Tesla's making a new low of day here as well. I really do like trading this chain in general. It's always had a pretty good chain. It's always been very liquid, and that's kind of really what I look for when it comes towards trading options chains. It's the liquidity.
Casey, I'm back green on my
Massive
SPY
knife on
puts too.
Tesla.
Oh, here we go. Target's about to hit. There it is. Full target hit. Let's go. I paper-handed ES, though. 6 measly points. I could have got 12.
Well, this gap's looking juicy though.
Oh, I know.
It could bounce, at least initially right there. But man, that's why I swung them, because I'm like, we didn't have much strength to go higher, in my opinion, in SPY compared to Qs, just risk reward. So still holding these 540s for tomorrow. Q just dropped 100 points in the last 15 minutes.
Still, what's it called? Still looking at the Qs though, because I think that even with that drop, they're still green. Yeah.
Yeah, so important to remember that Qualcomm is, or not Qualcomm, I'm sorry, Avgo Broadcom is one of the top holdings of QQQ. It's top 10. I think it's number 7, 6. It's pretty heavily weighted though.
You know what Broadcom's market cap is? It's a massive company.
550 billion.
770.
I
11th
was gonna
largest.
guess 750. Yeah.
All right, guess what company is 550 billion? Visa.
Boy.
That was a hard question. Yeah, I didn't want to. Visa, JP Morgan's right there. Walmart's 530.
The Walmart was going to be one of my answers. It's pretty wild that AVGO is that much bigger than Walmart.
Tencent's 450. 18 billion. The largest Chinese company on here.
Just double checked myself. Avgo is number 6 on the top 10 holdings of QQQ at 4.38%. It's actually heavier weighted than Google.
There's 2 Google shares, so Google's probably actually more heavily weighted.
If you add the 2 Googles together, it is probably slightly, about the same almost. A little bit bigger Google. Costco and Tesla also in the top 10 of QQQ.
I'm going to take another light trim here on the rest of these SPY puts. I'm being
Crypto names
runners now.
What were you saying there, Sniper?
The crypto names are looking pretty rough.
Yeah.
Coin, Marathon, Riot, MSTR. SPY's approaching 540. It's probably going to be pretty interesting over there.
All right, I'm out majority of my SPY puts here. I'm just going to be in runners with the stop moved up.
Meta new low
Wolf,
day
that
took
Apple
out
prediction.
yesterday's low.
Ooh, the Apple prediction I pinned up in the nest above isn't looking amazing so far. Still plenty of time. End of day guy.
Mm,
I think it hits. I'm still confident.
I have hit a couple today.
My team was
down
dead
over a
last, and we're
percent.
slowly making a comeback. Watch out.
My team's doing pretty good.
Oh, but Sabrina did get robbed for me, so I'm a little salty about
Oh,
that.
how about that? Top of the 70 leaderboard. Shy's number 1. I'm number 2. Tied with the same percentage.
Oh, let's go.
Evan, not too shabby. Number 11.
Not bad. It's been a little rough time for me, honestly.
You started trading in real life. Yeah.
It's true. Some of them have been doing okay. Let's see. Where's Mobileye? Mobileye and Apple, my 2 trades right now. And I have a little hood as well.
Ooh. Yeah, my team is putting in that work.
Oh, we're about to have that GameStop call here, aren't we? In about, what, 30 minutes?
Does anybody know if it was Roaring Kitty selling
No, we
the?
don't know yet.
So I saw a theory that he had to have sold at least some based on the open interest.
The everything I was researching into, it's a high probability. I mean, it was like the open interest updated this morning, and there's like over 50,000. It looks like were closed out, and there's only a few players that had anywhere near that amount.
If I'm not mistaken, he had 100,000 in total, right, of the 21s or 2012s.
Like 120,000, I think.
120, yeah.
And I think like 50,000 were closed out yesterday, which could be a combination of people, right? So it's tough to really know, but most people are speculating it was him. But it makes sense, right? He had to, I mean, if he wants to exercise the rest of them, he had to raise some cash.
People think he's an idiot, and I think clearly he's not, even after that live stream that I watched.
The GOAT live stream.
I rewatched Dumb Money on my plane.
What'd you
Was the
think?
movie? What'd you think?
I've seen it already, but like, it's a pretty good movie. I like it. Definitely makes me want to buy GameStop. What do you guys think of it?
I thought it was funny. He said he's never actually watched the movie, which is interesting.
Is it good? I've never seen it.
Yeah, it's funny. It's the dude who played Joker, or not Joker, the Riddler in Gotham, the 2019 one with Robert Pattinson. Plays Keith, and then they have Pete Davidson playing his brother. And yeah, I mean it's pretty solid. Evan, did you watch it?
Seth Rogen.
Seth Rogen's in it?
Pretty sure Seth Rogen's the hedge fund manager, right?
Seth Rogen is in it. He does play the guy from Melvin Capital, right? Is he Gabe Plotkin?
Yeah.
Yeah, Seth Rogen's in it. Nick Offerman is in it. He plays one of the guys as well. So yeah, it was pretty good. They got a pretty good cast. All right, QQQ bouncing here. It's back up about 0.5% on the day. Some of the other stuff that was falling with it, such as Apple, bouncing a little bit as well. Mobileye, not bouncing as hard as some of the other stuff. Tesla not bouncing super hard as well. Could be just a little relief bounce for a second here. Wouldn't be surprised if we kept on selling off a little bit lower. Evan, do you need Apple to flip all the way back and go upside?
For what?
Your prediction?
Yes. It would need to hit 216.18 by the end of the day.
Got it.
Watch out. Also, hey, the Blossom account's 2 followers away from 1K.
Hey. Let's go.
I pinned the last tweet up in the nest above. It's actually a really good chart. It's the changes coming in S&P 500.
Evan, I got a question. Do you know when the Tesla Investor Day stuff is?
Well, the vote already
Or
happened, so I don't think we care about it anymore, honestly.
shareholder? You don't think any other headlines will come out?
Order filled.
No. Shareholder meetings
I'm
are
sure they'll have
generally
an
pretty
official.
boring. They
Interesting.
will. But I'm telling you, don't waste your time on this one. Shareholder meetings are pretty boring. You're not going to get anything out of this.
So just
So enjoy the
GME.
rest of your day. So just GME. And Mobileye. We can start talking about Mobileye if we want.
Evan, what do you think of the new Apple news?
Apple Intelligence and stuff like that?
The new form of payment.
Order filled.
What is this? iOS 18, if I'm not mistaken. I can't remember which number it was.
iOS 18 is the new one, yeah.
Yeah, what's your thoughts on that overall? Like, I mean, seems like some pretty cool stuff.
I'm excited for the Apple Intelligence things. I've talked about this a bunch. I think that this will cause an upgrade cycle. You can't use any of the new AI features they have unless you have an iPhone 15 Pro or later. So anyone with a regular 15, anyone with a 14 Pro or whatever won't be able to use them. And I think that will cause a pretty big upgrade cycle. So I'm excited for now the September event when they're going to unveil the new iPhones and talk through some of the differences. I think it will be a big one. I'm excited. We're going to be able to start beta testing it. If anyone has a 15 Pro, I think you'll be able to beta test it like now.
I think I saw somebody post one of those on like a story a couple days ago, but I'm pretty sure that it's available now. Just
Which phone do you have?
I have a 14, nothing crazy, but
So you won't be able to use the AI features, which is a wild thing to say. This is last year the only thing they had, the big thing they had was the change to USB-C. This year it's a little bit bigger.
Yeah, no, I'm not saying I could have gotten it. I'm saying I saw it on like an Instagram story. Somebody saying that they could get it, like it was on the App Store.
Let me look.
Software update.
Frank, did you sell that back test right there? I did a little bit.
Yes, sir.
At 88.75 was yesterday's high and the overnight low. I had to try it. It's up
Yeah,
about
I did.
I want to see the whites in
20
their
points or
eyes.
so.
Sell it,
Well,
Frank.
that's what we're seeing on. I think Celsius is seeing the whites of some eyes.
Oof.
I'm still in Celsius.
It's coming back over 61 here.
It's trying. I gave it a little breathing room this morning.
We'll
I didn't
set
want to
better
see it
days.
below $60 psych level. If it does it again, I'll probably
talked
end up
about-
the July swing. We'll see.
We talked about Monster the other day, and it's continued to fall. MNST.
Yeah, Ep, it's funny, you know, we worked together on that. You probably heard him go off at 85, 86, 87.
I did.
Yeah.
It's funny when I look at a trade and I hear, all I got to hear is order filled, and I got some confidence from that.
The three of us know what we're doing just by the order fills. It's great. And so does, actually, I think that the audience does also. They tend to pick it up over time.
Yeah, I mean, if you're trading and you're looking, you know, you start to recognize some of the setups, and then you hear it, you can almost tell, especially if you listen multiple days.
Today was very clean, unbelievably clean.
Long RTY.
Interesting.
days like yesterday, you make one mistake, you're scalping all day to get, like I did all day yesterday, to get it back with those huge swings.
We should get a
Hey, we got a
bounce
new
here. SPY
all-time high.
retested the bottom of my zone.
We got a new all-time high today on the video, if I'm not mistaken.
Yeah, it's just kept them going.
For those that don't know, RTY is essentially futures for IWM. IWM hit around the 201 psych dollar level here. SPY retested the support zone.
Ethereum news from Gary Gensler, some kind of headline.
Gary Gensler. No,
Here we
he said
go.
he sees the ETFs being approved in the summer. Or the S1 approvals.
Here we go. I'm scaling.
Gary Gensler. The GG.
I took half out here.
Order filled. Order filled.
And I
You want
put
a
more
little
out at 91. I
Mobileye,
covered.
Tesla.
I've got a fib at 92.5 right here, and the EMA.
Got more stuff going lower here.
All right, I'm going to cover another here on RTY and then move the stop up. Beautiful bounce on IWM. This is the hourly support zone on IWM. Now, this morning pre-market, we kind of talked about it. If it holds here on the 4-hour time frame, it can set up an inverse head and shoulders. Stop on RTY is 34. I'm going to put an order in at 38. So it's 2 more points upside or 2 more points downside for a take profit or stop order.
Order filled.
A lot of the stuff that was up a little bit higher today has faded a decent amount. Now you've got stuff like Square down 2%, CrowdStrike's down about 0.75%. I know that Shai was talking about Snow earlier. They pulled back as well, down about 2%. Ariel, I see you joined up on stage. What are you looking at today?
I'm once again looking at the home builders, and I'm watching the metals. Energy is kind of interesting as well. Yesterday crude was up, and names like VLO are just kind of falling off the map. So I'm not exactly sure what's going on in the crude space, but that's definitely another group that I have my eyes on. And then the obvious is semis. I mean, they're way too extended for me to engage in like new positions. I do own Nvidia from $850, basically pre-split. So we're just kind of hanging out and letting them trend for now. Home builders in particular, Nail, which I thought was a good short, had a pretty big up day yesterday and then a rejection at the 50-day. So they are a group that I'm watching for a breakdown. And then the metals.
Order filled.
I still don't like, as much as I like the gold monthly chart, I still don't like how crowded they are in terms of positioning. So I'm still kind of looking at them for possible shorts, copper, silver, gold, and we'll see how they pan out. But
order filled.
Tesla's fully in the gap, trying to go fill
So
it.
new low of day. Oh,
didn't they get approved? I'm almost
We're in-
surprised they're
we're
giving
in
back a
sync
bunch of
together.
this move. I saw Elon said that he was approved, and then the name that's kind of caught my eye today that a bit unexpected is SMCI. It's up 7% today, and it's it's kind of unexpected. It was looking kind of dead over the last few days, and then today just
There we go.
big spark of life. So we'll see kind of get back over the 50-day. It looks pretty good.
Order filled.
Yep, there's 20 points. I took a Trump, right?
Yeah, I was short a lot, so I had to cover a little bit just to get it under control.
Let's see if SPY can get these 540 puts in the money.
Order filled. Order filled.
I'm also thinking if semis get weak in any kind of way, AMD's got to visit to that 200-day, about mid 140s. So it's not going anywhere while you've got AVGO and NVIDIA, just seeing new all-time LRCX, ASML, MPWR. I mean, the group's got so many strong names, and AMD just refuses to get out of its own way. So if the group even for a moment looks heavy, AMD probably, rolls over even more. I mean, it's really hasn't gone anywhere. It's just kind of been trading sideways, somewhere between these high 150s and 170s. But, if the semis finally do get heavy, I would think mid 140s is coming for AMD.
I just took a starter on the SPY 541 call at $1.02. Today's expiration.
Stop filled.
My SPY chart is in the nest at the top. The very first photo of that's my SPY chart. You'll see why it was target. You'll see that green zone there at the bottom. So this is my low zone. So this is where buyers can step in. And if you notice so far, SPY is getting bought up and holding this zone every single time.
Let's go.
So I like it for the bounce here. I really
Nice
do.
little I like receiving your blessing, Casey.
Still below the 90 EMA on the 5. So it's just, yeah, what's up?
I said I like receiving your blessing. I don't like fading people.
No, you probably took, what expiry contracts did you take?
Today's 24th.
Yeah, absolutely.
13.
No,
Sorry.
I mean, the same thing right there. When IWM caught that little pop right there on futures, I mean, I'm still short SPY, but I was able to take a long position at the same time just to get opportunity on both sides of the chart.
Almost time to short GameStop again, Casey.
I got a tight leash on this one.
Microsoft's doing well, but NVIDIA just popped up, rejected VWAP pretty hard. It's coming back down.
Ooh, Microsoft. That's a good double top right there.
AMD new low of day.
NVIDIA.
CrowdStrike middle of day.
Ooh, big pops here on AMC and GME.
Yeah, I figure they're gonna pop it into this conference. So that's what or whatever the investor day call thing.
Yeah.
What, 10 minutes or so? 12 minutes?
I've been holding AMC comments for a little while. I got a cost basis of $2 and change, so I mean, I don't really mind what it does here.
All right, come on, SPY. Go to 540.
Come on, NQ, drop it.
Go. This zone.
13% down here.
I covered 80%. I got stops at 80 on the balance.
Yeah, I'm still holding 2/3 here.
Nice.
I was trying to
2/3
get
of your
a
longs
fill
or
closer
shorts?
shorts on NQ.
My friend in Discord is short NQ right now too.
I just got stopped on the balance. This is good. Boy, they're moving quick. Huh?
Yeah.
Yeah, she's trying to hold in here. They're trying to maybe put in a higher low. We'll see what
SPY is
happens.
Back to
holding
entry
the
on a spot.
zone, but then it's holding the zone but rejecting the 9 EMA, so it's just stuck between these two right now. This resistance right above, and then this support right here below. It's just pinned back and forth right now.
Just looking through large cap tech. Tesla's still trying to put in some type of bounce, but not really getting it. Apple, we got the lower move that I was looking for there. SPY been just traversing for a little bit now. Meta popping in a little bit right here.
Sitting about 4% up on SPY calls here.
Nice. See if there's any other interesting news. Curious, some of these high short interest stocks, a lot of the financial ones on there. In fact, that CB, the one that Buffett started buying, seems to have decently high amount. Hasn't really done too much since it popped off the news of him buying.
You're looking on Seeking Alpha. I was looking at the short interest thing too. It's interesting.
Yeah, it's curious. Do those, I feel like we hear about much higher percentages.
Yeah, no, I mean they're talking about S&P 500 financial sector companies. I wouldn't think there would be too high there, so I'm not surprised. 0.74% really isn't anything. FactSet, that's what I was going to ask if FactSet was. That's why we're talking about it. 5.4% short interest.
Good point.
Franklin Resources. I guess the shareholders don't like all the tweets about crypto.
Yeah, they changed their profile picture and everything, right? But yeah, that's we were looking at the same thing there.
Come on, Mobileye.
I fear we might be in a little consolidation zone on SPY.
Chipotle, Sweet Green, and Starbucks among Goldman Sachs top restaurant stock picks. Is Chipotle still a massive portion of Ackman's portfolio, Evan?
Yeah, I think he sold a little.
Probably for
Yes,
the
it
best.
is.
With a huge position.
Yeah, he sold about 10% of his Chipotle position last quarter, but it's still 20% of his portfolio. He's probably still selling a little bit more.
I'm long Sweet Greens. I think Rachel was too. And also, I started a small position. I know it's like the valuation is stretched, but I started a very small position in Kava.
I want to try the grilled steak.
Is that new?
Yeah, they just added it.
I had Kava last night.
You didn't try the steak, did you?
I didn't see the option.
I did. I passed one, and I did see they were advertising on the outside. I'm curious how it is.
I saw the advertisements too as well, but I didn't see, like, they didn't have it if I wanted it. They must have ran out. Kava in Miami is always crazy busy.
Dude, it was like 11. Yeah, I don't know, 10 o'clock maybe on Saturday, maybe 9 o'clock. I just walked that back pretty aggressively. Between 9 to 10, we'll say, maybe 10:30. The Cabo was packed. It was pretty crazy.
Which city are you?
That was New York City. That was the one near Grand Central.
Oh, dude, I know the exact location. I've been there.
Yeah, it's good. Come on, Mobileye.
Yeah, we got to get it moving. Hey, if you're in the crowd for this next space, feel free to start requesting up. Tom, Chris, Mike, see you guys hanging out. Neos, feel free to get up on stage now. Just got to hit that request button.
MBLY $40 call, July 19th, $1.20.
All right, you're coming in on them too?
Yes, sir. I'm going to try to get back in these using some profits from last week when I traded it. So get some farther outdated calls for a swing position here.
Perfect.
Still sitting at entry on SPY calls. Actually, I'm 1.5% up here.
Yeah, they're just kind of floating around over here. SPY NQs last 20, 30 minutes, nothing.
Guys, I got to head out. I got a lunch meeting, but nice trading with you this morning. And have a good day, guys.
Thanks for hopping on,
Bye,
Frank.
Frank.
Later, Frank.
All right, Frank, we'll catch you later. As soon as he leaves, this short's finally going to play out.
Yeah, right. Now we can dump.
People are kind of asking the reason on why I'm entering into the MBLY swing, just the TA behind it. If you look at, I missed the entry a little bit ago because I was in SPY, but I mentioned it the other day, was $29 level on MBLY. If you go to the daily time frame, that is the daily 9 EMA. It hit it almost to the penny, just went a few cents below, and it got a nice pop back up here. And so far, the daily candle is forming a green hammer candle, which is relatively signs of bullish strength there. So just a buy the dip opportunity to get into a longer term position swing. So that's the reason why I am getting into the $40 calls here for July.
nicely done, and I appreciate the explanation. I know we've been talking about them a good amount this morning, so probably helpful for people to have a little bit of the background there. So are three of us in Mobileye? Is anyone else in Mobileye? I know Banana was coming in and grabbing some.
Oh yeah, Banana's all over NBLY. It's crazy. It was yesterday. I think he posted it. He bought a couple thousand shares of Tesla and another few thousand shares of TSLL. And I know this morning, obviously, Tesla was up 7, TSLL was up 14%. So I know he probably had a really good morning after that Tesla news.
Yeah, RIP to those that sold the position. But I mean, it did come back down a little bit today. It was up a lot in the morning. It was up at one point almost 8%, and now it's up 3%. So not quite where it was at necessarily prior to the last hour or two.
I
But
should
of
have gotten the
course,
post out. Tesla's over 190. Oh well, missed the chance.
Second trim NQ right here at 30 points.
Evan, Apple, new low of day.
Holding 1/3, one runner.
Oh, let's go, Apple.
Green to red. We'll see. We'll be back. We'll be back. Don't
Green
worry.
to literally
My
just
jinx.
based off of the big run that it had going into tomorrow, I don't think it would go.
I feel like anytime I throw something on
Just
Predictogram,
not
it's
right now.
bound to not happen.
Let me know when you put some downside Apple stocks, Daipo.
Yeah, I had upside SPY, and like I said by like 11:07 a.m. or something like that, and it will never happen whenever I put it on Predictogram ever.
I have my days. Some days I'm hitting really well. Some days I'm missing. Today is one of the missing ones.
I've been doing pretty good on there. All right, guys, we are going to roll into our next chat here in just a minute. Awesome trading with you, KC, Emp, Sniper, Kim, as always this morning. Feel free to stick around if you guys like to. We are going to have a fun chat here into the next hour, keeping the finance talk going. But I really appreciate you guys hopping on and hanging with us. Encourage everybody to follow them. And I welcome the new folks to the stage. We've got Mike up here, Ariel. Well, actually, you were hanging out for most of the past one, Ariel, the last 30 minutes. Chris, Tom, and of course, Austin and the Neos crew. So we are going to be talking about really just being prepared for market downturns. Obviously, the market has not been downturning, but it never hurts to be prepared. Let's say the market does have a big pullback. What are you going to do? How are you going to react? That's what we all want to know. So with that being said, Austin, good morning. Turning it over to you here.
How we doing, everybody? Good morning. Happy Thursday. It's 10 a.m. here in Nashville, Tennessee. Skies are blue. Markets are mixed. Not mad at it, though, and excited to jump in. But yeah, I mean, Gav kind of said it best, right? You never really know when markets will pull a 2022 on us. I mean, that was pretty crazy. But let me be clear, right? Before we get started, I don't think that we are going to have some crazy market downturn in the near future, but it's never a bad idea to begin to think about these things, especially as you see 42% of U.S. small companies be unprofitable, as we see market breadth be as narrow as ever, right? Getting held up by the biggest names like NVIDIA and Amazon and Meta and Microsoft, right? Those four names account for 50% of the S&P 500's gains for the year. So I just think it's something that we need to be talking about and something that people need to have on their minds, especially as, more and more people kind of want to include dollar cost averaging into the strategy, especially on a downturn. But, I want to turn the microphone over to the guys at Neos first to kick us off because you guys are sort of this awesome suite of ETFs that fit inside of a portfolio no matter if the markets are going up or if the markets are going down. So can you kind of break down why your ETFs perform so well during both bullish markets and bearish markets, as well as maybe, what that looks like from a portfolio construction perspective?
Hey, Austin and crew, it's Garrett here at Neos. Thanks for
Let's
having me on
go, Garrett.
today.
What's up,
Yeah,
dude?
got to switch it up a little bit. Troy's been getting the mic too much, so had to take an opportunity to steal it away from him. But appreciate being here today and talking to everybody. Uh, yeah, I think as we look at the markets overall, I mean, I think one part of our thesis in investing is, providing solutions and different products that fit different people's perspectives and views on the markets. As we know, and as Wolf was just hosting in the last, show, everybody's talking about their trading and what they want to do. So we think about the same in regards to offering products that allow people to take advantage of all market cycles and all asset classes. And so as we think about, kind of equity markets, here at all-time highs and of course, everyone's opinions of tailwinds or headwinds coming from the Fed and inflation, on our equity products, we do love the fact that it generates income and we're selling calls just because the idea behind that is let's generate tax efficient income and get paid for these days where market's flat, slightly higher, and then certainly lower because you'll outperform the underlying equity benchmark and do that in a tax efficient way that people can continue to get, a reliable monthly distribution into their account to pay bills, to reinvest, to do whatever they need to. But we do also offer products on the fixed income and the cash side of things to make the overall asset allocation, as robust. So as we think about kind of investments and asset allocation, we like to have, generally a sleeve of all pieces so that you're able to, weather any pullback in the equity market or unknown if you're going to rally to, all-time highs. You have your equity exposure, you have the fixed income to be able to generate some income or buffer that downside, to it. But what we really love to do is overlay the options on all sides of that. So if we can generate tax efficient income by either selling put spreads, against some of our fixed income positions, or selling calls against the equity side of things, it kind of gives you a little bit of that belt and suspenders to weather and take advantage of volatility in general, regardless of market direction, to be able to generate really tax efficient income for either the equity side, the fixed income side, or irregardless of market direction on that day-to-day basis.
I love that breakdown. And just thinking toward now your specific and unique opinion, I don't think all-time highs are bearish, but do you have any perspective, Garrett?
No, I definitely don't think they're bearish. I think they're bullish overall. I think we're certainly in a market right now where it's a little unique that the Fed is really driving, the majority of it based on, inflation data that we're coming. And so that's really a day-to-day occurrence. I mean, today's an interesting, day. You obviously saw a big run up, earlier this morning, but vol's up. So that's always something we're watching is an interesting characteristic. If the audience hasn't done that, is watch the days when the equity market's up and volatility's up, meaning either the VIX or the VXN. That tends to say, people are buying protection on this rally, and there's a chance that you could see, a short-term reversion. But overall, definitely bullish signals, seeing all-time highs, and we are certainly constructive for the long haul. I mean, I think there's short-term, issues and concerns around interest rates staying high for very long periods of time, but there's still, a lot of health, I think, overall in where this market is.
Right there with you. I think the only concern that I have, and I think other people have talked about this, is like the jobs data that's being reported. I know Jerome Powell cited it there on Wednesday. He's like, yeah, this, it's a strong job market, but it's kind of weird data to see as the unemployment rate ticks higher. And I think we saw now that Americans working more than one job, right? So two or more jobs rather, is now at like recent all-time highs. It's crazy. But anyway, appreciate the perspective. Want to push the microphone now over to Mike. What's up, Mike? How's it going? Would love to get your perspective on, as it relates to volatility in the markets or building a portfolio that's, ready to weather the storm. How should investors be thinking about downturns? Should they try and time the market? Should they just ignore them and dollar cost average throughout them? How do you think about that?
Yeah, appreciate the question. Love jumping in here and hearing some of the perspectives from a lot of the great speakers. My perspective really is that, I tend to flip from be bold to be boring stances on the market, depending on what kind of signals I'm seeing. And, there's times, and I kind of look at that as whether you want to be offensive or defensive, whether you want to swim in kind of the dividend income pool for a while or be in the more risky parts of the market. That's how I sort of approach the should I be prepping for a downturn? Should I be looking for more upside type approach? And what what you should do. I mean, I look back at a couple years ago, it was all the dividend defensive type sectors, things like utilities, consumer staples, and so on that were doing pretty well. And you had the more offensive things, industrials, financials, and so on that were lagging badly. That really kind of flip-flopped at the beginning, late 22, beginning of 23. And ever since then, I've been kind of recommending on moneyshow.com and my columns at events we've hosted and so on to be more offensive. It's been an offensive market. But, when it comes to prepping for a downturn, looking for some chop, what are some things you can do? I mean, again, if you're looking at hedging, protective puts, things like that, purchasing put option protection, volatility is still pretty low. That's something that you can look at doing if that's something you want to do. If you don't want to be involved in options, you just want to kind of, again, look at your stock or ETF portfolio, then that's where, you do swap to some of those more defensive yield oriented sectors. And I think particularly in this environment, that latter step makes a lot of sense, because if you go back to 22, nothing worked, right? I mean, bonds stunk, stocks stunk, and so on. So you really couldn't kind of take that 60-40 approach and expect your bonds to bail out or support or defend you against the weakness you were seeing in your stock portfolio. But I think if you look at some of the data that's been coming out lately, you look at the cooling in inflation, you look at some of these, the technical action and things like TLT, I think it argues for, this environment being somewhat different, and you can be counting on or using sort of the bond defensive income side of things to help hedge against downside risk on the stock side of your portfolio. So I'm pretty encouraged about what's going on there. I think today's an interesting day, for example, where you see things like TLT holding up, even as the more economically sensitive things like transports and small caps and so on are underperforming. So again, income oriented strategies in your stock portfolio, using bonds to hedge, those are the kinds of things that I think make a lot of sense if we're going to have kind of a summer slump or choppy type environment, which is sort of what I'm looking for.
I think that's a great perspective, and I'm trying to think where I saw this. Maybe it was Marlin Capital here on Twitter that mentioned it in his Substack. But essentially, I saw some chart that was showing that the summer months. We're right in the middle of it right now, between I don't know, early June to maybe late July, right? This kind of 6 to 8 week period is just directionless, right? A lot of fund managers are sort of, cleaning their portfolios. Maybe they're doing some tax loss harvesting efforts. I don't know, right? But for whatever reason, why it's directionless, who knows? But it's a very directionless period. So, back to the idea of Garrett talking about here, sort of this income generated over that 2 month period, right? About 2%, 2.5%, depending on if it's SPYI or QQQI. It's a fun way to kind of generate some extra, yield in your portfolio while, historically speaking, the markets remain flat. Really appreciate the perspective, Mike. And, I'm curious if you were to sort of, advise someone as well. Hey, this is not financial advice, guys, right? We're just a couple of people on the internet having some fun here. But people that are building their portfolios from scratch right now. You mentioned the bonds, you mentioned some of the yield stuff here, TLT. Appreciate that. Anything specific though? Anything tactical as it relates to specific ETFs, specific tickers? I'm just a really big believer in we talk about commodities or we talk about a theme or something or a sector of the markets, right? But it's man, tell me exactly what you're talking about.
Yeah. No worries. I think, you can do two kinds of things here. I think, if we do get somewhat of a summer slump, pullback, correction, whatever you want to call it, I think you want to be dipping your toes into some of the things that have been laggards, that have been underperforming. That would be small caps. It's things like IWM and so on. I think that those types of sectors or those types of plays within the market, you do want to be kind of throwing some bids out there as they pull back, because I think that this is not going to be a market that completely stays focused on tech, QQQ type names for always and forever. I think you are going to see some broader participation as we get into the back half of the year. So that's why I'd want to be bidding in some of those things that have lagged. I would also say even things like XLRE and or REITs. I mean, they've had a terrible couple of years here of underperformance. You can't open a newspaper, if anybody does that anymore, go online and read about, there's another office building that sold for 60% off and so on and so forth. But I think that sector, especially if we get a break on the interest rate front, these are kind of your undervalued, underappreciated, underbought type sectors where people haven't really been paying attention, but could do well in a pullback, especially if you're tilting towards kind of a yield oriented strategy. So those are a few of the specific things I would say, look at doing here if we do get a summer pullback, and look for maybe, better performance as we head into the back half of the year.
Man, I'm right there with you. I love it. I love it. I love it. I hope y'all are taking notes. I'm learning so much right now. I'm just constantly going back between my computer and my phone, just like writing some of this stuff down. So I appreciate it, Mike. What's up, Kim? Want to loop you into the conversation, my fellow Costco lover over here. Actually, I don't know if you follow me on Instagram. I just made a cool video about Costco. Are you okay? You sound like your voice is a little low.
Well, I have that low,
Oh,
sexy
I thought
woman's voice, you know.
I thought it was like an illness or something. I was like, I won't call on you if you're sick. I'm sorry. How's it going,
No,
Kim? Hope you're doing
I'm
well.
doing good.
Talk to me about market downturns. Talk to me what you do to prepare. Talk to me what you're thinking about. Are we going to experience one now that we're hitting all-time highs? Is the AI bubble going to burst? Like, what's your perspective on all this chatter?
Yeah, I mean, I think it's hard, right? Because when you're in these big uptrends, and overbought positions, just like oversold, you can keep going up for a long time, right? So it's hard to predict it long term, at least in my opinion and just my experience in the market. However, I think, midterm looking 6 months out, with the election coming up, the potential that that won't be decided right away. I think we move up probably or chop sideways into July, August, and then when people start realizing that, we might not have an outcome in the election, I think that's the biggest risk personally right now. And a lot of these stocks have just flown absolute. I mean, I was just looking at ARM today. It was 110 maybe 2 weeks ago, up over 158 today. I mean, a bunch of stocks have made those kind of moves. So selling covered calls as we get into July, maybe some more long dated ones. I love to short futures as a hedge against my long positions because there's no theta decay in that. I can scale in as it's going up, as the market keeps going up, trade around my position. So that's another way that I personally hedge. Um, I don't like to necessarily buy outright puts. What I have done in the past is I've bought puts on the actual futures because they don't have the same theta decay. Personally, that's been a way that I've traded it short. But definitely, I think there's going to be a time coming soon here where you will want to have some protection. For me personally, I'm not looking to have my overall portfolio net short. The only time I've ever done that in recent history was during COVID, where I actually was net short against my long positions. However, I didn't know as much what I was doing and I did very well. And now that I'm much more aware of the market and, I probably would not go net short again, but I definitely would hedge looking to bring down my deltas in my overall portfolio.
Very cool. Very cool. Okay. So a lot of cool option lingo there. For the maybe retail investor like myself who is not the most well versed as it relates to some of these strategies, where's the easiest number one place to start for learning about this stuff, in your opinion?
Well, the easiest trade to put on is covered calls because,
Oh, 100%.
yeah. So, I mean, that's the easiest trade. It's the one that you don't have to spend a lot of time managing. And so it's not going to be a 1-for-1 though, or doing the second easiest trade to me, to protect some downside. And maybe like right now with Apple, it's a good way to protect that big move in Apple going up. If you don't want to actually sell any of your shares, is to put a short call on, so a covered call, and buy a long put, which I call a hedge wrapper. It's like a little present when it goes your way. And that's the second easiest type of trade. And that is more of a 1-for-1 trade. You know, if Apple goes down, you're basically protecting your stock if you're buying a put close to the money and selling a covered call. Where I really learned was Tasty Trade. It's all free. You don't even have to have an account with them. They have live trading all day and some of the kindest, most nicest people. And I'm not promoting that platform because I get anything for it. It's truly where I learned about selling premium. And there's no obligation for me to do anything. I don't have to pay a monthly fee. I don't have to have money in the account. All of their live trading is free and all of their learning tools.
I love it. I definitely need to check that out. I've heard good things about that platform, but I've never taken the time to really dive in. Also want to congratulate you on, I think you just bought a Tesla. That's fun.
I did. As I've mentioned before, I'm not a big Elon fan, but that doesn't mean I'm not going to buy his product. So I don't have it delivered yet. I'm waiting. I got the 0.99% interest rate. I mean, that's basically free money.
Oh my God.
Why would I use cash to buy it, right? So I got that interest rate and I got the Quicksilver. So that one is their new color. I went with the Quicksilver and white, and it looks like delivery will be so far literally one of the easiest car purchases. Well, I don't have the car yet, but so far for applying for the loan and, choosing it, it's one of the easiest car purchases I have ever made. No haggling over the price. And when I test drove one, I was like, oh my gosh, look at what I've been missing. So Mom
Really?
Ann's
That's so
Trades,
cool.
I don't know if any of you follow her. She literally was peer pressuring me to buy one, and finally I relented and went and test drove. But I'm like, oh my gosh, she's right.
That's awesome. Congratulations, Kim. I appreciate the all this added perspective on volatility options and resources. And let me know how the Tesla drives once you get it in August for sure. Want to bring Simon into the conversation. What's up, Simon? Hope you're doing well, my brother. Talk to me about market downturns. Are we, obviously, like I said earlier, 4 names are the reason, half the return of the S&P 500 is up year to date. 42% of these small caps. If you look at the Russell 2000 year to date, it's drastically underperforming the NASDAQ and the S&P, right? There's just a lot, market breadth is narrow, in my opinion. So what does that mean for investors? Did we lose him, or did y'all lose me?
No, we got you. Mark, can you hear him? Testing.
I can't hear him.
I can't hear him as well. He's a listener on my end, but
shoot, I'm sorry. Why did I? Was a flop.
No, he's up here. He just can't hear you. Mark, can you drop down and come back up so you're able to hear Austin? It's just a glitch that happens with spaces.
You want me to drop down?
Yeah, if you're able to drop down and then just request back up, you'll be able to hear Austin.
Okay. I can hear Austin.
It's like this is my first space or something.
Well, if I can hear Austin.
All right, you know what, Simon? We can come back to you. Same question to Mark.
All right. So I'm going to go to Mark because I wasn't sure if there's an issue there. Simon is still listed as a listener for me as well. I wasn't sure, but let's just go to Mark, and then I'll try to get Simon up. I'll message with him now.
My bad, guys. That was such
No, it glitches all the time, dude. It'll show people on stage. It'll show people in the audience. It's not your fault.
All right, cool. Well, not my first rodeo, so haha to all you guys that are clowning me in the comment section right now. No, I'm just playing. All right, Mark, but same deal to you, man. Let's talk about market breadth. Talk to me about everything going on.
The market. This is a bull market for 3 stocks, right? Nvidia, Apple, Microsoft, basically. There is an ETF called RSP. I know we're here with Neos, but they don't have an equal weight ETF. If they did, I'd be talking about it. But RSP is the equal weighted ETF for the S&P 500. So it runs. They basically take the sectors of the S&P, equal weight them, and rebalance every quarter. So you're still kind of slightly more heavy, the large cap names, but it's a lot more equal weight. Since it's equal weighted. it gives you a much better perspective of what the whole market is doing. And since the middle of May, when that thing peaked out, it peaked out on May 20th at 167.90. It's down about $4. So that tells you that, you know, comparing SPY to RSP is a really good way of seeing like how is the market moving. And right now, really, the market has been pretty much flat, kind of downish a little bit the last few weeks. So what do? One, I like the idea of a NEOS and using it to dollar cost average. I was literally, you'll love this. I was on with my kid's financial advisor, and he was talking to me about running covered call strategies for their investment portfolios. And I mentioned, he had not heard of your investment fund. And when he and I looked at it, he was like, wow, this is great. You get the monthly distribution. And again, not an ad for NEOS. You get the monthly distribution.
Let's go. Heard it here first, ladies and gentlemen. Approved by financial advisors that Mark, the absolute GOAT, uses. So boom, boom, boom.
So, you know, and you can, you know, you get the monthly distribution. We can reinvest. It's a great strategy, an absolute great strategy for those of us that have little kids. Well, mine aren't so little. I've got a 14-year-old and a 7-year-old. But, you know, it's a great strategy for them that aren't going to need the money. So now I'm going to get it. Is it okay if I get in the weeds here a little bit, Austin? I don't want to scare anybody.
But, you have my permission.
All right. So there are two strategies I run for this market. One, you have to understand the effect interest rates have on options. When interest rates go up, it increases the value of calls and decreases the value of puts. We are at a level where interest rates haven't been in 20 years. I think the last time interest rates were this high, Austin was maybe in first grade, right? Learning how to add and subtract. So understanding that interest rates have that profound effect on options. You can collar for credits right now. So what do I mean by that? Let's take a look at July, right? The S&P is trading currently 54.13. I can sell the 55.25 call for July, and I will collect about $33 for that. I can buy the 5,300 put. So these are both about equal away from this. So this is an even collar. And the 5,300 puts are only going to cost me about $28. So I'm actually collecting $5 to basically be long the market up to 55.25 and be protected below 5,300. If we stay in a range, I just keep the money. And with interest rates higher, you're able to do that. Now, in a low interest rate environment, that collar is going to actually cost me money. So using interest rates to our advantage to collar around our positions when we're nervous around the market. And I generally think low breath markets are a tinderbox. So that puts us in advantage. So right now, that collar that I just discussed is bringing in about $6. So every one of those is going to put $600 in my pocket between now and July expiration on the 19th. Now, that is the simple way. And for me, that is the simple way that I hedge. Now, the other way that I'm hedging is having an understanding of the VIX futures curve and how it relates to the S&P 500. So we run a non-correlated option strategy where we finance S&P puts by owning VIX puts. We basically buy VIX puts that, and this is going to be a little wonky, but VIX futures trade at a premium to the cash index, but at expiration, the two of them come together. This is called contango. Kim is very familiar with that, being a futures slinger. But contango in the VIX exists about 85% of the time. And generally speaking, if I buy a put, and if I buy a slightly in the money put and I sit on it, it's actually going to have a positive yield if the market stays in a calm fashion. So now I take that VIX put position and that expected yield, and I take that and I go out and buy S&P puts or S&P put spreads. And now what I've done is created a strategy that actually has a positive carry and has a downside hedge. I can run over the top of my my long positions. That's the wonkier way I do it. And that's something we have at Option Pit that you can check out. Andrew Giovinazzi runs it for us. But those are there. If you just want to run collars with the 10-year where it is, and short-term rates where they are, getting collars that are about equal weight, like equidistant from where the underlying is trading, and collecting a credit is not something that we've been able to do for a very long time, and is a great strategy. And another point to the value of NEOS right now, and then I'll quit, is that with interest rates higher, even 0DTE see a little bit of that. And that's going to allow that income generation to be a little better. So there's the simple way, NEOS dollar cost average, a little more advanced, taking those collars for credits. You want to get into the weeds with me? Now we're running a non-correlated hedging strategy.
Man, that was a great breakdown. Back to my question to Mike when I was talking to him about like the tactical specifics, right? Which appreciate you, Mike, for being so specific and just informative. And then Mark's over here doing the same damn thing. Guys, these are the Twitter spaces we're hosting, right? We are doing it. We're talking about it. We're in the weeds with it. I'm so excited. Mark, what a great breakdown. And Mike, again, thanks so much for breaking that down as well earlier. I'm learning a lot, and I hope you guys are taking notes like I am here. Simon, now I see that you are 100% a speaker. You're back with us here, man. Sorry to have put you on the spot like that earlier. That was a hiccup on my side. But, sort of back to what Mark was talking about as it relates to hedging, as it relates to sort of this 3 kind of tiered strategy as he kind of broke down for us regarding market volatility, taking advantage of it, hedging your portfolio, kind of like what Kim was talking about. What do you think about, one, the current markets, right? It's very narrow, but the markets are up while the economy is kind of down. But, what do you think about what's going on? As well as, 2, how are you positioning yourself in case we do see some sort of market downturn?
Sure thing, Austin. First and foremost, can you hear me okay?
I got you, man. I got you.
Okay. Thank you. We had some technical audio issues, just making sure. It's always, by the way, I always like to start by saying thank you for having me on the show. It's always a pleasure, Austin, to join you on the stage like this.
You know what? It is the most fun things I do every week or every other week are hosting these damn Twitter spaces. Y'all are the best. I'm having fun.
You're the man. Okay, yeah. So I wanted to bring a different perspective to this. All the speakers, great points, great insights that have been mentioned. But I do want to bring the perspective of an individual investor who invests in individual stocks. Right. This is very different than trading the S&P or the indexes or the ETFs and all the great points that were brought up earlier. I would just point out one caution, which comes from my own mistakes. Don't make these same mistakes that I did, which is I think that there's certainly an investing mentality that we think we are smarter than we are sometimes. And when you see the market going up or going down, you tend to your brain wants to extrapolate that a little bit forward where we think we know what's going to happen, and it gets us in trouble, and we can make big mistakes by doing things like that. And I brought to the table two mistakes that I have personally made that I think will frame kind of what I'm trying to point out here, which is when you're dealing with individual stocks, don't tie so much to a certain price that you think that you're going to get back in at or that you want to sell at, especially if it's a position that you want to hold on to for long periods of time. And again, this is something that kind of comes from pain. We've got our lessons that have taught us why this is, but we certainly have a bias of like saying, putting an anchor down and saying, this is a price that I want to buy back in on. And my example for this was Enphase Energy, right? This was a company that years ago, back in 2019, a couple of years ago, this is, again, a kind of string inverters. These are the micro inverters that are being used for collecting current and then distributing it through like solar power. So if you're collecting it from a solar panel, sending it out to the grid, you've got to convert that from DC to AC. It's also being used in supercharging stations. But back in early 2019, I said, if Enphase just gets down to $5 a share, I was going to buy back into it again. It was one of those that had struggled for several years. It had gotten, I thought, a little bit ahead of itself. And I said, shoot, if it would get that back down to $5, man, I would buy it at that point. And of course, what happens? What's Enphase at today? I've got to pull it up on whatever the number is now. It's $130. So I missed out on basically a 25 bagger just because I didn't want to pay an extra $1 per share at the time. Don't do that to yourself. If you see a long-term trend that's developing, you find the right company like an Enphase out there that's benefiting from the adoption of solar, especially in the United States as it's being subsidized in California and elsewhere. Jump on that. Don't haggle over $1 a share like I did with Enphase. And then the second mistake was NVIDIA. This is the opposite. Rather than saying, if it gets down to a certain price, I'll buy more of it. I sold a good portion of my NVIDIA in 2022 when I thought that 100 times free cash flow was simply just too expensive. And when you look at NVIDIA's stock price over basically 2 years, it's a 10 bagger, right? If we look at before the 10-to-1 stock split, we've gone from 140 a share to 1,300 a share, which was something that was a lot more money was on the table because of a company that was riding this really important long-term trend that I thought I was so smart to cut because of evaluation. But I wish I could go back and tell myself not to do that. And so I think that the takeaway that I have, and again, this is not for larger market trading. There's certainly cycles that we see in the market. There are people far smarter than I am that are able to trade on that volatility and all the things we were mentioning about earlier. But just for individual stocks, I think that there is a bias that we have as individual investors to do things that cause us pain later on. And there's nothing wrong with taking some money off the table. And, we talk about trimming, or we think valuations are too hot, or a bunch of other things. But on the other hand, save yourself a lot of pain that you're going to kick yourself in the ass. If you have a really good company and you're arguing over a couple dollars or, 10 or 20%, if it's something you want to hold on to 3 or 5 years in the future, I would caution against doing that, because I don't want you to have to be on a Twitter Spaces 3 years or 5 years from now talking about mistakes that you made, just like I did for those two examples of Enphase and NVIDIA.
Man, those are great examples. And oh my gosh, I've done that so many times. Both from didn't buy it because I was like, nah, it's not cheap enough. And also sold too early. I remember I sold my NVIDIA, I think it was like December of 22. I'm right there with you, dude. I was like, no way. Now, mind you, it was only 2 shares. It wasn't that much, but it could have been like $3,000 now, right? But anyway, back to what you were talking about. To kind of follow up there on those points, what pieces of advice would you give investors listening right now to help them kind of navigate when to buy, when not to buy, when to sell, when not to sell?
My strategy is kind of a barbell. This is different for every investor. I encourage everybody to find what works personally for them. But I kind of have the stocks that I want to play defense, and I want to have the stocks where I want to play offense. And I think that was mentioned by one of the previous panelists on this show, which is, be able to sleep at night, right? Have some solid dividend payers. You can trade in and out of those positions. I love to reinvest dividends and just let them compound over time. But it's the sleep at night defense portfolio. And then you've got other companies like Rocket Lab, where you really think this could be a 10 bagger right now because it's completely underpriced and it's right at the forefront of a long-term trend. And so the offense portfolio that I'm going into is you take a very small initial position in and then add to it on strength over time. And I don't cut. I very rarely ever trim anything from that side of the strategy that I have. So I guess, how do I think about markets? AI is certainly changing the game right now. But I think that there are pockets, and especially in space economy, some stuff that's going on in biotech right now is quite interesting. But I tend to play the offensive portfolio of like, what do I really think is a 10 bagger? And then if the company's performing in the places that matter, keep adding to it over time.
I think that's a great perspective, man. I appreciate that. What's up, Shai? How's it going, dude? Want to bring you to the conversation as someone who has a lot of experience buying companies at very low prices and watching his investments quadruple in value. Talking to you, CrowdStrike. What's your perspective on this, man? How are you thinking about market volatility? What do you do when maybe your portfolio experiences volatility? And how do you feel, more importantly, about Snowflake just shitting the bed right now? Because I'm right there with you.
No, I mean, you kind of nailed it. I get excited when there's blood in the water because that's where you find the real alpha. If everyone's on one side of a trade, generally the easy money or like the big alpha move has already happened, and now people are kind of too late to the game. Perfect example is a lot of new investors are kind of caught off sides with Celsius this year, where they anticipated this is going to be like a 50 plus grower this year because it grew triple digits last year, and that was going to be a hyper grower for like a year or 2 years to come because the international story is just getting started. But they're now noticing like it's not hyper growth. It's still growing 30+%, but the valuation doesn't make sense as much. And now it's turning into an earnings growth story. But because of that, like that's totally fine. But the really reason that's a big issue is because there's a lot of new investors and all that easy money. When like I got into Celsius in the teens, now it's okay for me to I trimmed 50% like a couple weeks ago, and I've been open about it. Now it's okay for me to ride my last 100 shares, and I'm not adding to it. But again, like I'm not essentially red on the position. That's an example of like why I love adding when there's a lot of FUD. Like Celsius, a lot of people there's an aluminum can shortage a couple years ago that caused like Celsius to like not hit their top line growth. And it went down a lot. Also, there's some accounting issues with Celsius reporting the way they were reporting, and that also made that stock go down 50%. And I was adding during that time because I needed the long-term growth story. So like there's a lot of alpha to be made and there's blood in the water. Snowflake is a perfect example. I'm adding I doubled my position after the 2 quarters ago when Frank Sluman was retiring, the stock gap down. I essentially has doubled my position, not double, I increased it another 50% this past month. And I used to own 100 shares of it entering the year. Now I own 300 shares. And my cost base is in the mid 130s now because of that. But I'm adding because I had a long term vision. Like a lot of people don't realize like how Snowflake's going to transform the enterprise AI space. Like they just see it as a data warehouse company where 35% of the Fortune 2000 companies just store their data, and that's all Snowflake is. They don't really give it an AI premium anymore, which is justified because they don't have any go to market AI products yet right now. They just have Iceberg and they have like Cortex AI, but they don't really see like top line revenue boost from AI yet. Yet is the key word, and because of that, they are factoring into the too difficult to understand bucket or not an AI beneficiary, and now the valuations be compressed buckets when that's not the case at all. And right now, it's just, I get why Snowflake's like being red this year, like, but I don't think it deserves to be 36% down year to date, not at all. And it's just because of if you know that management right now is factoring in zero Gen AI bump on the revenue, but they're essentially reflecting all the AI related expenses this year, like that shows, all right, that's a sandbag. There's gonna be some kind of tick up on revenue for those AI related investment expenses, but they're just not factoring into their guide. And right now they're guiding 24% with 27% free cash flow margins, Rule 40 score of 51. And that's with a sandbag. So knowing the conviction I have in what Snowflake does and how transformative it's going to be in the enterprise AI space, I'm pounding the table, adding when there's just so much FUD and narrative out there that's like Snowflake has no moat, has no competitive advantage, just a data warehouse company. And I laugh at that, and I don't really fight back or clap back as much because I want to continue adding. And also I don't want to give ammo to the fire of like everyone's just finally beating down the popular kid, because Snowflake was that popular kid since their IPO, and now clearly they peaked apparently to everyone in 2021, 2022, 2020, 2021, and now they're just the drunk loser after high school's over with. That's not the case at all. Same thing with MongoDB, down 46% for the year. But like MongoDB, like those Snowflake and MongoDB, they're two databases that are gonna be changing how enterprise AI will be an absolutely necessary component of the modern AI tech stack. Knowing what the long-term vision is, I'm adding a stupid amount to both names right now, but I'm also like not adding to my winners. Like CrowdStrike, Transmedics, Palantir, clear winners for me. I'm really not touching that because I'm giving the kids that aren't getting as much love, the MongoDB, Snowflake, Atlassians, like and Global E, like I'm giving those kids like who nothing about their past two earnings have been thesis breaking. It's just a valuation compression due to uncertainty on whatever front, organizationally, macro, on it's very specific for each company. I won't get into it, but knowing my thesis won't change. My long-term conviction is still there. Valuation is compressing, and what in my eyes are fire sales in those names, I'm going to be adding. And I don't care what everyone else says because I'm not contrarian, but I don't really value the popular belief of certain names because I just think is a lot of noise. And I do believe that if a lot of people are on one side of a trade, I'm a little cautious. Like same thing with gambling. If all my buddies agree on one pick, I'm like, all right, well, I now disagree because we can't all believe the same thing because this is not how capitalism works and that's not how gambling works. There needs to be some kind of equal bearish, equal bullish type of commentary or belief in a name, and right now, everyone's doubting Snowflake, doubting MongoDB, doubting software. Like they're claiming software is dead. I know for a fact that won't be the case. There's going to be probably 10% of the software names survive in like 5 or 7 years due to the the consolidation nature of what AI is going to do in that space. But you can't say software is dead. And I'm putting my money, my chips into those names that I believe are going to survive this, and the names that are going to survive this AI space or the software industry within the AI digital economy, those names are going to have unprecedented pricing power of what they can charge because what AI, if AI is the engine, data is the fuel that's going to be fueling that engine. And what do you have to do with that data? You need software and platforms and databases to kind of handle all that data. So as an organization, you can dictate what your future behavior will be on strategies or how to innovate the products. So hopefully that answered it for you, Austin. I know like I love it. I embrace
That was great.
volatility.
Yeah.
Yeah.
No, I'm right there with you, man. I try to embrace volatility, but again, back to the idea that I'm a human being, and when I see red in my portfolio, my stomach kind of turns around a little bit. But that's all part of the game, you know. We're over here just trying to, be net buyer of assets. Want to bring Emperado. I can't even say his name. The cool dude with the cool um, photo of the guy with the beard that I wish I had. I wish I had a beard like that. Maxa, come up on stage, my friend. Talk to me about how you're thinking and just what's your perspective right now on the markets. We're hitting all-time highs, even after adjusted for inflation. A lot of AI talk still. Apple had a 7% run up yesterday, 200 billion in market cap added overnight. Right? Like, what do you take of all this?
I mean, this market's crazy, right? The stat that I like the most, and I think it's more important than people are giving it credit for. The three largest companies in the world all closed at all-time highs yesterday, with the market also at all-time highs. It's tough, right? So I'm a trader first, and then an investor. So I have both hats that I use. So trading wise, you can trade short term downturns. You can try to just stay long, but throw a dart and be long. Honestly, the last several months, but when we talk about the investor side of it and the looking, you want to protect yourself for downside, but you don't want to miss opportunities either. So basically, with the run that we've had, the way I've approached this is just diversifying, just taking profits and putting them into like some ETFs, some more conservative strategies, just to protect myself from the downside. But I'm not reducing my original position, if that makes sense. So I just don't see any like signals that say, hey, a big downturn's coming. Now, these little 5% corrections, 8% corrections on tech, I think will happen just naturally from time to time. From once a quarter maybe, but overall, I don't see anything that tells me, hey, you need to start hedging hard with puts yet. Now, I mean, everyone's got their own strategy, but that's just the way I see it. I mean, this market's super strong. I mean, yeah, there's some decent arguments out there though that it's just the mega caps and it's just 3 or 4 stocks and stuff. But you wonder that the counter argument to that some of these other ones may catch up at the same time. So it's a very interesting balance right now, trying to navigate it. But hey, I'm loving it. I'm loving the market goes high and my portfolio keeps moving in the right direction. As long as that's working, until the trend breaks on that, I think I'll just keep riding it, right?
Yeah, I'm right there with you, man. And I see Mike's got his hand up. What's up, Mike?
Yeah, thanks. I was listening to the comments there, and one thing that popped into my head when I look at this market that is that expression. There's a thin line between love and hate, and I say that because there's a thin line between buy the soft landing because that means the Fed's going to cut a couple times, and sell stocks because the data is getting too weak and the Fed's not cutting yet. Today, in the last couple of days, kind of got me thinking about that, because I look on my screen, I see TLT at the highs here, I see the transports near the lows, I see REITs outperforming more offensive stuff like financials and so on. And I think it's an interesting, you couple that with the interest rate markets and what's going on there, we're kind of wrestling. I think what the market's having an issue with here is, okay, the Fed came out, they said they're basically sitting on their hands. Then we're getting these claims data that's weak. We're seeing PPI kind of roll over a little bit, CPI coming a little bit weak, which is what ostensibly you want to see. But I think people are going to get a little more worried. I think one of the catalysts for maybe a weaker market or some chop here is going to be people arguing about, are we heading into too soft a landing and the Fed sitting on its hands, or is this exactly what we want? The action that I've seen in the last 24 to 48 hours is kind of the market wrestling with that question again. It doesn't mean things like tech that are actually kind of benefiting from a lower rate environment and from secular growth trends versus they need a strong economy to grow, are going to do poorly. But I think, these other parts of the market, if they go from kind of being just less participatory to being more of an actual drag, that's going to be an issue for the broader averages. That's just, again, that thin line between love and hate, I think, is a good thing to keep in mind right now.
What a great perspective, man. I really appreciate that. And, I'm right there with you. I think that and I'm not an expert investor. I'm 28 years old. All I have is a degree in finance and economics. So I get it, but I'm not some of these Wall Street veterans that are on this call right now. But as time goes by, there's obviously feeling good. And I felt very bearish, obviously, in 2022. There were reasons to be bearish. And I felt still even bearish in the beginning of 23, but I've not yet felt yeah, we're feeling good. We're back, baby. Right. I haven't felt that yet. So I'm right there with you, man. And to your point, it's a lot of a mix between some of the underlying economic data as well as, who's really carrying the market right now. I look at some of the other positions in my portfolio, and it's oh, you've been flat for 2 years. Nice. Whereas the S&P and the NASDAQ are up so much, and some of these other big names are up. So it's just, I don't know. It's just a really weird feeling, and I can't put my tongue on it, but I'm riding it out. And I appreciate everyone's perspective throughout this Twitter space on what they think about it and what they're doing as well. Cool. All right, Chris, what's up? Chris Patel, how's it going, my friend? Chris is a guy that calls bullshit early, frequently, and publicly. So I'm eager to hear the bullshit that Chris is going to call.
I'll just say one thing real quick. When it comes to market downtrends, there are usually black sheep events, that come around and they'll knock everyone down. I usually just keep a list of companies that are really strong performers in every sector. And if I see that sector get unnecessarily beaten down, it's okay, it's time to start adding to the position. So one, I have a hit list of companies that in an ideal scenario, if things got sold off, I would buy them. An example would be Meta, when Meta got really, really torn down. And it was okay, this doesn't really, make a lot of sense. And one other thing is just make sure everyone just go to the cash flow statement and look at the operating income. All right. If the business is generating operating income, it's not going anywhere. All right. They can maneuver themselves in 100 different ways to navigate the market cycle and get through it and actually come out stronger on the other side. So a lot of people, they'll purely look at net income and be oh, look, earnings are down, everything is bad for this company. And yet their operating income is just constantly growing higher and higher. So number one, invest in companies who have positive operating income that they can, play around with, especially during weak periods where that income, that cash can be deployed in very, very strategic ways to pull them out of that tight situation. And every company should be evaluated on its own merits. And usually when the general market goes down, that's, believe it or not, the perfect time to be adding things. Because essentially what you're doing is you're buying strong businesses. A lot of retail investors have to get out of the mindset of stock price and stocks and instead think of it as market cap and the company. I'm buying a business. Because if you think of it as I'm buying a business, you will save yourself so much headaches from investing in some really shitty companies that have no tangible future. So I'd say just, think of everything as a business, go that way. I also have one very interesting plaque above my in my office, basically says "Thou shalt pass," because basically downturns come, downturns go, bull markets come, bull markets go. Everything just comes and passes. You just have to understand how to navigate it a little bit, and the companies that you invest in, just make sure that number one, they have the resources to navigate through that down cycle, right? So someone was mentioning Enphase. Enphase is a company that is profitable. They're not going anywhere. So yeah, you just went from a high price to a low price. Guess what? You just became a long-term investor. Congratulations. And two other things that I'll say from my experience that I've made mistakes on in the past. Don't let tax efficiency become the mantra that gets you into trouble. Now, what I mean by that is, I just bought this stock 3 days ago and it's already up so much. I really want to sell, but I'm going to hold it for a year because you know what? I don't want to pay taxes on it. I want to be preferential with my long-term gains. And then they stick around too long and they end up screwing themselves. No, if it feels bad, if the company's not good, you don't want to deal with the options part of buying puts on it, just sell it, call it a day, pay your taxes, be happy about it. I just made a giant win. Great, done. Another thing is, if you do have a really elevated position in your portfolio, it's done extremely well, and it's a large part of your portfolio, don't be cheap. Buy some puts. I feel I've said this to some people and like, hey, why don't you just look, like you're up like 400% on your NVIDIA position. Why don't you buy some puts? Oh, no. Why would I sacrifice some gains? Bro, you're up like 400%. Like you can sacrifice, a couple of points here and there to buy some puts, especially if like you're warning me that, hey, I think there's going to be a pullback. So buy some puts. Oh, but what if they expire? I'll lose money on my, okay. Do you think that way when you buy a Ferrari and you're driving it through Midtown Manhattan? Say, oh, you know what? Let me risk it all. Let me drive my Ferrari without any insurance. No. So think of puts as insurance. So stop thinking of a lot of this stuff as, in 100% numerical terms. Just think of it as in real life terms. Would you drive a Ferrari around without insurance? No. So if you have a really big position in a company, it's done really well. Sell a little bit, because you just want to keep your position, you want to keep your cost basis, and buy some puts and sleep well at night. That's it.
I love it. And, I'm sure Kim's going to get that insurance on her cool new Tesla. So, maybe she's going to pay for it with her options. Who knows? But no, I appreciate that perspective, Chris. And I largely agree with you here, man. So thanks for taking the time to sort of roll that out. I know we have one more speaker we haven't talked to. Real simple, cute little picture of a dog. Day trader turned swing trader. What's up, Real Simple?
Hey, how are you?
Good. So just heard from Chris as it relates to sort of the taking human emotion out of investing, especially during times of volatility and sort of hedging positions via options. What's your perspective on 1, the current markets, 2, hitting all-time highs, 3, AI bubble burst? Is it here? Is it not here? Are we just going to continue to all print money? Like, what's going on, man?
Yeah, I mean, it is definitely hard to be bearish on a market. Somebody mentioned it earlier, when the 3 largest companies in the world are all hitting all-time highs with the markets. That is not something that I can personally do is get bearish on the markets. The way that I personally like to protect myself, in particular, when I think a downturn could occur in the market, is if I'm in leading names, like I do own Lilly and I own NVIDIA and FSLR and I own some really great names. And what I like to do is, if I think that the market's going to take a downturn, I spend pretty much all of my day scanning the market, and I'm looking always at groups, and I'm saying to myself, while the market's going up, what are the groups that are beginning to underperform? And then typically when the market then begins to give you some distribution near those highs, those underperforming groups are the ones that do, naturally even worse. And so if I don't trade options myself, but if I do look to protect my portfolio, it's always by shorting lagging sectors. to the market. And then on the flip side of that, when the market is going down, and then you're looking for names that you think can potentially lead, they usually stick out like a sore thumb, and I can go back to early October, and I even tweeted this. While the market was still, had another 3-4 weeks to go lower, cybersecurity, your PanW, your CrowdStrike, your Zscaler, your SNPS, they were going sideways, essentially outperforming and showing relative strength and outperforming the market. While the peers and other names in the market are going down, cybersecurity as a group is going sideways. And again, hanging above key moving averages. So I just like to do the exact inverse of that. And I like to look for names that are showing relative weakness while the market is showing relative strength. And then that usually puts my eyes in the right place as to what can lead the market lower when the market begins to show some distribution. The last thing I really want to do is, look at a company like NVIDIA or AVGO or, KLAC, ASML. And I mean, the thing is they're all in the same group, and the group is all at all-time highs. I've got a bunch of stocks that are $1,000+ and that's not for me to decide how high they can or can't go. I do, but if I thought, hey, we're starting to get a little stretched here, valuation's starting to get a little crazy, what have you, then I am looking for relative weakness. Again, do I want to necessarily short something in the group that's been showing weakness, or do I want to short a whole different group that's been showing weakness? That's up to the individual. Recently it's been, home builders showing a little bit more weakness. Yesterday the banks kind of caved in a little bit, all while the markets are ripping. Those are all little flags that you can, kind of track and say to yourself, okay, that's some relative weakness. When the market begins to show some distribution, can I get myself positioned in these names that we're already breaking down ahead of the market? Or again, it's something that I've mentioned to Wolf a ton is, if NVIDIA is going to break down, AMD is going to really lead that way. I mean, poor AMD today, another red day, while, you've got AVGO up 13% and NVIDIA up 3%. I mean, at this point, it's been kind of like a running joke for the last 2 weeks. Like, where does NVIDIA have to go for AMD to get moving? 1,500, 2,000, or 200 at this point. Like, where does NVIDIA have to go? And so that's how I like to protect myself when I think down
back to 1,000.
Yeah, back to 2,000 from 128. Yeah, that's probably what it's going to take. But in reality, that's really how I like to protect myself. It's tough to just sit there and try to cherry pick a top in the market. You could use something mathematical where you say, hey, the market's 8% from its 50-day, or it's 6 times its average true range from the 50-day, or you could do that with any individual stock. But instead of me trying to say, hey, and again, I own NVIDIA, but instead of
heads up, by the way, just a heads up, I got to start another space here actually right now at 12. So just going to give you a quick final comment, give Austin a final comment. I actually have to close this one out.
No, you're all good. But yeah, like I said, my focus will always be on, if I want to protect myself, it'll be done by shorting lagging names to the market or to their individual group.
Mic drop. I love it. I hope y'all have Broadcom stock. I bought a bunch of it back in September of 22. I actually just pulled up my my purchasing history there. Excited about it. Everyone, if you've not yet followed the Neos account, Garrett and Troy, the managing partners that have created this awesome suite of ETFs that we know and love, SPYI, QQQY. Not just do we love it, but Mark's sons, or Mark's kids, I don't know if it's a son or not, Mark's children's financial advisor loves it too. So check them out, Neos Investments. They are the best. And Garrett, thanks for joining us, man. And everyone, thanks so much for having a cool conversation. I took a lot of notes. I learned a lot of cool stuff, and I can't wait to do this again very soon. Gav, I'll turn it back to you.
Perfect. Thanks so much, everybody, for being on today. If you want more spaces, I'm going to open one up immediately after I close this one. Shout out to Austin, the whole Neos crew, everybody else that's been on here today. I appreciate so many insights. I got so many quotable lines and takeaways from this one. So this was fantastic. We're looking forward to the next one. See everybody on the next space. Be there in about a minute. Take care.